Good morning, everyone, and welcome to Traders Corner's summer special event. This is Rob Anthony, your favorite host, and on our panel today, we have handpicked 7 professional trading experts of the highest caliber. They've agreed to share their most consistent and profitable trading strategies with us today in a free online educational forum. In today's summit, we're going to learn from a wide range of topics that include how you can beat all the markets with ultimate precision to how to leverage artificial intelligence into an automated strategy. So let's not waste any more time. Today's show is packed with great information. Our first presenter has mentored traders from beginner to Wall Street traders since arriving from the Ukraine, God bless her and her homeland, to the US with just $60 in her pocket in 1989. She built several multi-million-dollar companies, and she is very passionate about her students and proprietary alpha Fibonacci systems. She holds multiple degrees, is a classical pianist, marathon runner, wife, and mother. Ladies and gentlemen, it is my distinct pleasure to introduce the developer of proprietary alpha Fibonacci systems and founder of Fibonacci Trading Institute, Mrs. Alla Peters-Plocher. And I noticed the last name's now hyphenated. Congratulations, Alla.
Thank you so much, and thank you so much for having me on this very bright Saturday morning. It is my joy and honor to present to you this morning how you can beat all markets with ultimate precision. But first, traders, let me remind you an extremely important disclaimer. Please understand and trade only with risk you can afford. Please understand that every single thing in this webinar is to educate and empower you, and nothing constitutes a financial advice. All software and systems demonstrated as is, and no student had ever been paid for providing a testimonial. In this webinar, we will cover how to trade with precise entry stop targets on all instruments. We will review future stocks, crypto, and forex in the current and prior markets. You will witness how alpha Fibonacci traders trade in US and globally since 2011, and how you can beat all markets with alpha Fibonacci precision. So let's start with the offer for the attendees of this webinar on this bright Saturday morning. When you come to fibinstitute.com, as I posted link in front of you, you will see a pop-up window. If you sign up on this pop-up window, you will receive an invitation to our trading room where you can ask questions, where you can witness proprietary system and software in the live markets. So let's start the webinar, shall we? Briefly about myself, as you heard before, I arrived here from Ukraine. And again, please pray for Ukraine because it is surreal what's happening in this world. But we will be touching on exact same human ego that causes problem in the world, that causes problem in your personal trading. So when you start recognizing how everything connected and how you are in charge of your trading decisions, everything will change. I recognized in 2004 when I was introduced to Fibonacci that market formed by Fibonacci. Since 2008, when I witnessed proprietary system I developed in financial markets, when my system identified all crashes despite phenomenal fundamentals and phenomenal earnings, I refused to work for financial institutes. I just declined another offer from top financial firm on Wall Street because I only focus on my own system, and I live and breathe what I do. And I teach traders on FibonacciTradingInstitute.com since 2011 how to trade with ultimate precision. You can view thousands and thousands of videos on Fibonacci Trading YouTube channel. You can listen to students' podcasts, as I have waiting lists of students to share their stories constantly. I continue developing my own systems. As of right now, 35 proprietary systems. So I live and breathe what I do. I travel the world meeting with students from Switzerland to Dubai to Mexico to California to New York to London. Jennifer, as you can see in her top right corner, just send me a message on Facebook. You will see. Sam put his daughter through Harvard. I met with Ken in London, with William multiple times, with Victor in Switzerland and Dubai. All of these traders trading proprietary alpha Fibonacci system I developed and you will witness next. So what's essential to recognize? What is the number one predictor of success? Your circle of traders, period. Look around. Who is next to you? Is it someone who is successful or is it someone who is struggling? Is it someone who is bringing constantly another indicator every day, another cheap system, another something that will give you easy solution to trading? What's important to remember? The person next to you defines your success. Is the person next to you successful? Is the person next to you trading proven system? If not, you become exactly like the person next to you. Is the person next to you inspiring you or opposite? And that's ultimate definition of success. It's number one predictor what will define your profitability. In order to become successful top 5%, start trading as top 5% does. Stop chasing cheap delayed indicators. Stop chasing lucky point. When I worked in Johns Hopkins research, I witnessed clearly every single human brain does exactly the same thing human brain does day before. Beta waves activate your reactive switch, your gambling switch. But you're in charge to disconnect that switch and to activate your proactive brain. And that's your number one step to do. And that's how you stop thinking as a bottom 95% does and start trading as a successful top 5%. The only path to success is to trade as strategic, intelligent chess on all instruments. Successful trading possible only with a proven system. Successful trading must be rule-based with precise entry, precise stop, precise targets. Without this, there is nothing. Precision is a critical key part of trading success. In 2008, I recognized that market is a flawless alpha Fibonacci puzzle. This is a system you will witness next. System strategic institutional lifetime system for all platforms, all instruments, or with multi-market scanner and proprietary alpha Fibonacci software for NinjaTrader 8. Here's the software projected on NinjaTrader 8 on S&P mini future in the live markets at the market closed on Saturday. Here's simplicity. I was teaching in private mentoring Friday morning. This is a bold red zone, correct? Which means do not buy the market at this level. Monitor for short only. Trades played out on multiple other charts. I project software on 1-minute chart. What's important to know? When the price reaches decision point 2, exit your trade. And you also learn why price reversed from this level to the tick and continued sell-off again. Ultimate precision on 1-minute chart. Ultimate reminder. When you witness such precision, you remember market is ultimate alpha Fibonacci chess with ultimate precision in day trading on 1-minute chart. But as you will see next, on multiple instruments, multiple time frames, as every trader chooses the instrument and time frame trader trades. So trading markets, a strategic, precise alpha Fibonacci chess helps you to relax, helps you to start enjoying this game. You stop speculating. You start understanding far in advance where to buy, where to sell. And that's a critical key first step in trading success. Can you trade chess? Can you play chess? Can you play checkers? Market is chess. Market is checkers. Price moves one step at a time. Can you catch a fish? You have zero interest in little junky fish. You're only interested in catching solid, big fish. Your brain making identical decision. How you catch a fish, how you play chess, how you play checkers, how you drive. Can you stay in your lane? Can you hit the brakes at the bold red light? Can you push gas pedal at green? You don't swing between random lights, do you? You don't push gas pedals through the red light, which means you have huge potential becoming successful trader. And that's your critical key starting point. Simplicity. I prove this on 1 minute chart every single day. This is how Amazon looks. This is how Tesla, how Bitcoin, how Euro, how pound, how oil, how gold looks. As you will see next, all starts from purity, simplicity of pure price and trading markets as strategic intelligent chess based on only two components: indicator free price for entry and proprietary alpha Fibonacci rule for exits. You will never ever need another system ever again. Alpha Fibonacci system can be traded on all instruments, all time frames, all platforms, or with software for NinjaTrader 8. Here's example of long. Again, what do you see? Precise entry, precise stop, precise target. Never speculate, never gamble, ever. Trade markets with rules. And you know where to enter, and you know where your stop is, and you know where your targets are. At the bold green zone, you do not short, you buy the markets. That's it. And that's simplicity on every day, on every instrument. What does the majority of traders do who come to the markets? Exact same thing as everyone else. Diving into the world of indicators. $7 or maybe free or maybe $77 will make your fortune. That's reactive brain. That's gambling. That's how majority thinks. Intelligent human being recognizes after a couple of months of trying and trading that there is no such thing. It does not exist. But what exists is pure price. And when you can trade pure price for entry and alpha Fibonacci for exits, everything changes. Everything. And that's simplicity on long. When bold green zone is present and institutions buying the markets, you do not short. But if you are trading your own small account, you enter with precise entry, stop and target. That's it. Stunning reminder. Random number of points is not recipe for success. Random entry will never work. Precise entry, precise stop, precise target with rules does. Another short. Why is the short struggling so much at decision point 1? Because it's a counter trend short. On the counter trend short, price will struggle immensely at decision point 1, and you will see so much more on other instruments as well. But that simplicity, when you start blocking pure price, you start seeing clearly. Every instrument looks exactly the same because there is no chart that's telling you here the time frame. You have no idea if this is 5 minutes or 3 minutes or 1 or 15. It's pure price. It's identical on 1, on 3, on 5, on 15, on euro, on pound, on oil, on gold, or on S&P. That's it. I recognized that in 2004 when I started building my first system, when I thought I was looking on Russell, but I was looking on S&P. It was huge revelation for me to recognize when you can trade pure price, it's identical on all instruments, all time frames, all platforms. So when I work with Brad, it's an ultimate honor. It's an ultimate reminder why I live and breathe what I do. Brad made a serious effort, making $10 an hour at Best Buy, not anymore. Genius of a trader who is making phenomenal effort, trading with alpha Fibonacci rules. Pure price for entry, proprietary alpha Fibonacci for exits. There is nothing else. Words don't teach, experience does. Learning and trading with Fibonacci Institute has given me experience and keys to be a successful trader. That's it. And it's an honor to say that I'm strategy builder and a teacher with ongoing journey to near perfection. 20 years later, I built my proprietary systems, and I promise you, pure price for entry is the answer. And proprietary alpha Fibonacci retracements give you such ultimate precision. So you cannot short if institutions are long. This is the number one rule. This is a critical key part. So in a single lesson, traders are blown away to recognize why I coach JP Morgan traders how to trade proprietary system. Here is a stunning reminder. Let's dive into biggest crash since 2008 and let's dive into current rally. Are you ready? Many months in advance, you know where alpha Fibonacci reversal zone will be. Here's a market in at the end December 2021. We're discussing with traders and classes. This is a place you're exiting along, you're monitoring for market reversal. Here's alpha Fibonacci system on January 1st, 2022. You are not stressing out, you are not in panic when market starts crashing. Do you remember this before the crash? Do you understand how important this moment is? What do you see as a word? Reversal zone, which means high 80% institutional crash will follow next. What do you see that's playing out? By the end of February 2022, market sell-off is on. February 22nd, I received phone call from Ukraine, bomb starts flying. My friend is getting married. Everyone thinks they had a little too much to drink when sirens flying in Kiev. So how is it possible that institutions buying the market, that weak market skyrocketing 350 points? Oops! Biggest crash. Russia losing its mind. We have student in the course in Moscow. I adore Georgie. He apologizes. My piano partner apologizes. What is happening with the world? Market is rallying 350 points. Do you remember this bold pink line? Do you? Do you remember how essential it is to respect this level? Price keeps bouncing 350 points non-stop from this level. In March, it continues. Institutional sell-off is on, but on the way down, institutions buying the market for weeks and months. You don't hear it in the news. You see it on the chart. Inflation skyrocketing and market keeps rallying, keeps rallying, keeps rallying from these levels. And you know this weeks and months in advance. War is getting worse. Fed is raising rates and market keeps skyrocketing at every institutional buy point. This was the worst rate increase. This is institutional chart, my goodness, but it's identical level at the market close with a software and 1 minute chart. You don't have to wait for weeks and months to see the power of the system and why traders are dearest friends for life, who trading alpha Fibonacci system on all instruments, all time frames, no software on this chart. What else are you excited about? You're excited about bullish rally at the bottom. But this is a lesson. During the worst bearish market since 2008, we had only a single month of sell-off. Every month, institutions been buying the market on the way down. And when prices skyrocketing in December 22, you buying the bottom. You're not a gambler. You using your limitless brain. You strategizing. You know quite well, many months in advance. This is where institutional orders sitting and waiting to be filled. To the upside, there is only one obstacle left. My goodness, bold pink line again. And do you remember this level? Do you? Again and again and again? So here's we are at the end of August. Market been selling off. But as you keep learning, bearish markets require drastically different skills to trade. Markets setting up for extreme fold. And you knew all of this months in advance. You are not a gambler, you understand. Market is flawless alpha Fibonacci chess. And that's the worst market sell-off with never-ending buying at alpha Fibonacci institutional buy point and stunning reversal all in advance. Are you ready for extreme fall? Are you prepared? So if you learn the lesson of bearish markets of 2022, it's a stunning reminder. Institutions buying the markets on the way down, even during worst bearish markets. So if you're trading with them, you are always on the right side of the market. So when you stop speculating, when you stop trading with random targets without stops, and you stop trading against institutions, everything changes. Trading becomes a bliss. I posted to you a movie Ken made about Fibonacci Trading Institute. It's posted on YouTube. Ken's words truly means the world. Ken and I met in London. Ken knows the power of the system. He's paying cash for his next house. He started trading Alpha Fibonacci system on crypto, on entirely different instrument than bread. And when he daughter gives me this card. It's everything. So let's take a look on crypto, shall we? And let's remember what played out. Again, please view movie Ken made about Fibonacci Trading Institute, summarizing my work. But let's recap crypto. Wow. Tom Brady hyping Bitcoin during Super Bowl. Do you remember that? I'm very, very happy that England instituted extremely strict rules that anyone and everyone who is hyping the instrument is actual criminal offense, because millions and millions of people lost fortunes because they believe in Tom Brady, correct? Tom Brady can afford to lose 70 million. Michael Saylor losing 6 billion in a day, hyping buy Bitcoin. So you feel like a fool if you're not buying Bitcoin. This is when this is happening. When we're discussing in the course, intelligent traders shorting, not buying Bitcoin. The first sell-off in 2021 was weak. The second sell-off during Super Bowl of 2021 exactly was the sell point, not the buy point. So when I receive very tearful phone calls with traders telling me, I wish I listened to you, but Tom Brady said so. Oops. Use your limitless brain. If trading on the hype worked, every person on the planet would be Bill Gates. Bitcoin collapsed 70%. Hype never works. Your limitless brain does. Why do you think Tom Brady is smarter than you? Tom Brady is phenomenal with playing a ball. Tom Brady was paid a lot of money for Super Bowl commercial. So when you recognize that all you have to do is exact same thing as Tom Brady does with his ball, you need to do with trading. Bitcoin skyrocketing by the end of January 23. Do you remember this level? With the software on 1-minute chart at the market closed on S&P? It's identical level, except when Ken trading crypto and Bitcoin, he's using his iPhone. He's trading on platforms I've never even heard of. So if you're trading crypto on other platforms, and if it has price and Fibonacci retracements, you just need to apply proprietary levels, proprietary settings, proprietary rules. That's it. Or use software for NinjaTrader 8, which is a phenomenal tool if you day trade futures. So if you learn your lessons during crash of 2022, you understand how game is played. Here's another phenomenal example. Cathie Wood. She didn't just burn billions on crypto. She also exited position on Nvidia before Nvidia skyrocketed. Did you know that? At the end of the webinar, I would gladly review Nvidia with you. And that's a lesson on using your limitless brain and trading markets as alpha Fibonacci chess, on day trading futures, or position trading crypto, or day trading crypto, because the rules remain the same. The only thing that changes risk management and trade hold time. Do you like to be in a trade for an hour, for a day, for a week, for a month, for years, or for a couple of seconds? Choice is yours. When you apply the rules, you can do both, because pure price remains the same. on 1 minute, 5 minute, or hourly, daily, weekly, monthly. Love, love, love seeing how fathers bringing their children to the course. This is ultimate reminder of simplicity of the system. When hedge fund manager in London bringing his son Dominic to the course, Dominic obsessed with day trading alpha Fibonacci software on Dow and S&P mini futures. Listen to the podcast and how easy system is. If 14-year-old boy can do it, so can anyone. But his father, Andy, has zero interest in day trading. Andy manages multi-million-dollar accounts with proprietary system on platforms and instruments I never even heard of. Because pure price remains the same. But this is confirmation of simplicity, of entirely different background of traders from all over the world. So the strategic trader from 14 to 80 plus year old, you become proactive. You turn off your reactive switch. You stop chasing the markets. You stop riding your beta brainwave. You start activating your gamma and alpha wave. You become alpha Fibonacci trader. You're riding institutional power. You understand where institutions entering and exiting markets. And when you do that, you trade Bitcoin or you trade any instrument you choose. Another legend, Theo, constantly stopping by to say hello, even 2 o'clock in the morning. We have phenomenal community in Australia, not just in London, not just in New Jersey. This is completely different instruments and Theo trading it all on MT4 and Ninja, on Forex, on crypto, on all charts. So when Theo says, what you teach is revolutionary in the trading space, and it allows one to just sit back and relax and just look for the highest probability trades. Theo produces $17.81 on every dollar invested. Here we go. Here's an example of what Theo trades. Here's Euro. I'm meeting with students in Europe last September. Why? Because I timed my trip perfectly. Euro at the bottom. And you know this far in advance. Do you like to buy the bottom as Theo does? Rules are met, take a trade. Euro no longer at 96 cents, historical low. As of today, Euro in entirely different level. Too bad for us Americans, Europe is no longer cheap to travel to. But are you surprised where Euro's selling off from? Should not be. Do you remember this level on S&P at the market close with the software? Do you? If I project software right now, on 3-minute chart, it's identical level as on Euro to the upside at the market close, on S&P to the downside, confirming time and time again price action is identical on S&P, on Euro, on Bitcoin, on Amazon, on Apple, on gold, on oil, on bonds, on ETFs, on mutual funds. If it has price, alpha Fibonacci system applies to all instruments, all time frames, or with software for Ninja Trader 8. Crush and burn Euro pretty please, as I can't wait to see my students in Europe next. This is Lifeline on Euro, and you know this months in advance. This level is out, Euro in free fall. Ultimate Alpha Fibonacci chess. I also time my trip to Canada when US dollar 40% higher. What a gift. US dollar did not crash through this level. Look at that bold green zone again. And you knew this many months in advance. If I take you back to January 2023, when I'm leaving Vancouver, US dollar starts selling off. And where US dollar bouncing from is identical level on MT4, MT5 is identical level on bonds, is identical level on futures. No software on this chart, none. Identical level with a software for NinjaTrader 8. It's all the same. So when you activate your proactive brain, when you turn off your gambling switch, everything changes. So many traders coming to me who've been struggling for 5, 10, 15, 20 years. Instantly they see how simple and pure price is. And that every single instrument, every single time frame is precise alpha Fibonacci chess. So when you trade markets only with institutions, when you think as a billion-dollar trader, everything changes completely. Trading becomes a bliss. Trading becomes a joy. Do you remember the events on Apple? Since 2022 to now, Apple at identical level. Right now, selling off. How is it possible? Earnings are stunning. How is it possible? Apple skyrocketed from exact same level where S&P was at the market close. What a flawless puzzle. Here's Apple before Rally skyrocketed. December 2022. So on Friday, student was begging me, please do not take millions from Wall Street. Please, please, please continue teaching. I beg of you. So I promise you, I don't know for how long I will be teaching this, but I simply live and breathe what I do. And if you see in this webinar, very clear message. Market is flawless, alpha, Fibonacci, chess. Everything changes when you activate your intelligent brain. Do not underestimate your brain power, because if you can drive, if you can play chess, if you can play checkers, if you can catch fish, you can trade Apple, you can trade euro, you can trade US dollar, you can trade anything you choose. Here's a final, very important instrument, Amazon. My goodness, do you remember CNBC hyping? Amazon is a safe haven. Hold Amazon forever. We're in classes, December 2021. Amazon at reversal zone. Here comes the crush. Do you remember that? January 22nd? Do you? Here comes the sell-off. My goodness. When price at reversal zone, you're not buying into this level. Success rate buying into this level less than 20%. And when Amazon loses $1 trillion, do you know what this is a reminder of? Much more of this to come. The events of 2022 will tell you that much more extreme events ahead. But bearish markets require drastically more skilled to trade. So if you're using your limitless brain and you're joining us in the trading room, I look forward to working with you. You can ask me questions about all instruments and you can review all the information on the homepage. View the movie Ken made about Fibonacci Trading Institute, as book will be released next year. And if you're done chasing, done gambling, and ready to trade predictive proprietary institutional lifetime system with precise entry, stop, and target on all instruments, all platforms, or with software for Ninja 8, with multi-market scanner group or private mentoring classes, video library of over 300 prior live recorded classes, live trading room, I look forward working with you. View students' performance, because if these traders can do it, so can you. All you have to do, start trading markets as intelligent strategic chess. And if you want to listen to students' podcasts, you will find story just like yours. If these traders can do it, so can you. So please choose from 4 options available to you. Option 4, the most desirable option, savings $8,000. It's a private mentoring that includes group course and video library modules trading room. I work with students in Australia in afternoon, in Japan in afternoon, in South Africa in afternoon. 80% of our traders working full-time or in different parts of the world viewing videos of prior live recorded classes. Group course, the most popular option 2. Savings $5,000. If you are not on Ninja Trader 8, join option 1 or option 3. Any questions for me? Do not hesitate to contact me 925-257-4298 or info@fibinstitute.com. So thank you traders so much for joining me here this morning. I hope you enjoyed this webinar. I recorded this event. The event will be posted on our website as well. Thank you.
Thank you
Have a
so much, Alla. And first, I want to congratulate you. I realize now your absence was probably to get married, so congratulations on that. And second, thank you for coming back. We always love having you on here. And I also want to thank you for making such a generous offer to our audience today. Your Alpha Fibonacci system looks incredible. I was looking at the charts and the lines, and I was like, oh my God, if I had this, I would be a billionaire already. Ladies and gentlemen, if you're looking for a proven system to trade the markets with incredible accuracy, like we just saw, look no further. You can find Alla's special offer in the chat box, and you can always find her at fibinstitute.com. Alla, thank you for joining us again today, and God bless you and the people of Ukraine. We're all praying for peace.
Thank you. It's been my joy and hour. Please pray for peace. Thank you. Bye-bye.
Have a great weekend.
Bye-bye.
Ladies and gentlemen, our next presenter happens to be one of my personal favorites. She specializes in helping people to day trade with confidence and ease. If you have the desire to learn to day trade successfully, she simplifies the process by completely breaking down the art of identifying high probability trade setups. Here to present how to use reversal and divergence to trade E-mini is Marina, the trader chick, Villatoro. Welcome back to Traders Corner, Marina.
Hi, Rob. Thank you. I always love your intro. You're one of
I
my
always
favorite
love
hosts.
finding out what part of the world you're in. Do you want to clue us in today?
Today, I'm still in Spain. I'm in Barcelona. So
I hear it's beautiful there. I haven't been yet.
it is. It's gorgeous. How are you doing?
Life's good. Me and the little guy are just got it going on, and we have a great time every day.
Enjoying summer.
Absolutely. You?
Yes. Hot, but enjoying. It's so hot here. It's almost like as hot as Florida.
Makes you appreciate all 4 seasons.
It does. I love it. Yes. Well, thank you so much for having me. And thank you, everybody, for being here today on this gorgeous Saturday day. Again, I love being on this particular summit because I get to talk with Rob and you guys.
Yay!
Thanks. Thank you. So where is everybody from? Where are you guys from? Because I'd love to know. Are you guys also experiencing some serious heat? Where are you from? I'd love to know. Put it in the chat box because I see a ton of people have shown up today. So that is so cool. I love showing up for that. Toronto, how is Toronto? Is that humid, hot? Is it breezy? I used to go to Toronto, but more in the winter for before, like when we used, yeah, I don't know why we used to go for the winter. Not the best time either. Winnipeg. So Winnipeg is probably, oh, it's rainy. Winnipeg is probably, I would imagine it's a little bit drier, right? You're kind of in the middle of Canada, right? If I'm correct. Where else are you guys from? I am seeing so many people. Come on, guys, let me know. If you guys are going to be here, share with us, participate, because I want it to be a very open, interactive seminar, right? Maryland, hot and humid. Yeah. Oh, it's not that bad. That's good, Carl. Singapore. Leon, how is Singapore's weather? I know very little about that side of the world, believe it or not. I would love to get to know it a lot more. It's hot. Okay. I think we're all down to hot. Oh, Manuel's DC. Yeah, my brother is in DC area. I know it's hot. New York is showers, so that's kind of good. It'll cool off the area. I grew up in New York. I know the New York summers. They could be pretty brutal for sure, unless you're like really up north in New York. I actually love it when I tell people that I'm in New York. I live in New York because I used to live around New York City. And they were like, oh, do you know this one person? And I'm thinking to myself, first of all, New York City has like, what, 5 to 8 million people? And then the whole state of New York is bigger than some countries. And people don't even realize that. It's so funny. Yes, David, it is Marina. Nelson, where are you in Spain? I am in Barcelona. Hey, that'd be kind of cool. I didn't know that there was somebody here who is in Spain as well. That would be super cool to find out where you are in Spain. All right, guys. Well, like I mentioned earlier, interaction, interaction, interaction. That is what it's all about. Ah, you're in Galicia. I was just there. Actually, I was just in Orense, literally in Orense a couple of weeks back. We went to stay with our friends in Santiago de Compostela, and they took us to Orense and to the beaches there. The most beautiful beaches. I think Galicia is a very understated area of Spain. Just blew our minds. It was so lovely. All right, guys. So I want to say this before I begin. I really appreciate you all being here. I truly do. And the point of this presentation is that you learn something. And I always find that the best way to learn is to ask questions, right? Trading is not a spectator sport. The more you guys get in there, the better, right? Like, ask me questions. There's no question that is stupid or weird, because if you're having that question, I can guarantee you the rest of the people in the room, most others are going to have that kind of question as well. So go for it. The more questions, the better. So I am Marina, the Trader Chick, and today I want to talk about 4 steps to simplifying your day trading, right? And divergence and reversal patterns are some of my absolute favorite, right? And I really want us to talk all about that today. Okay, guys, so let's jump in. This is me, the Trader Chick. And as I mentioned before, I am now living in Barcelona. That's why Rob was asking where I am now. We moved here a little less than half a year ago from Guatemala. I have been an expat now for over 20 years. We lived in Costa Rica, Guatemala, and now we just recently moved to Barcelona, Spain. Probably one of the best decisions ever, I have to admit. We absolutely love it here. Love, love, love Spain. It's a super special country. Anyways, I get a lot of people that ask me about being an expat, and I'm super happy to answer all your questions. You could just email me, thetraderchick@gmail.com, because I know a lot of people want to be expats, and the coolest thing of all is that with trading, you can do it from anywhere in the world. Another thing that I want to talk about is, before I began day trading, I was an actual fitness instructor and a travel writer. And the main reason I bring this up is because a lot of people think that you have to have a math background or you have to have a financial background, and you don't. That's the coolest thing of trading. You literally can be from any walk of life. Literally, that's the coolest thing about trading. And I'm trilingual. So the reason why I want to bring up being trilingual is mainly for you guys to kind of understand how I went about learning my trading, right? So actually I was born in the Ukraine. I am a refugee from the Soviet Union. We moved to the United States. I speak Russian, that was my mother language, but I was raised in the US. And because I was so tiny, when I moved there, I didn't learn a new language. I kind of just continue learning a language. So English is my main language, but I learned Spanish in my later years. I was already in my late 20s when I started to learn Spanish. And anybody who knows, who has had the opportunity of learning a second or a third language in their later years, you understand that it's a process, right? You have to go through this process of, it's a discipline, right? You have to commit yourself to practicing, to learning, to translating. It's this huge process, right? But once you get it, you got it, right? But you have to put in the time. And I was struggling with my trading for years, struggling. I mean, it was just crazy until one day, like after I've had several breakdowns with it, emptied out too many accounts, and I couldn't stay away. And I decided to look at it from the same way as I look at it from learning a language. And once I realized that the market speaks to us and that I wanted to understand its language, everything changed. And whenever I brought this up, a lot of people had these aha moments. They started to look at the market as an actual language. And I have to admit, it changed so many people's perspective of how to read the markets and listen to the markets. And like I mentioned earlier, the coolest thing of all, you could do it from anywhere. There is no excuse, guys. When I lived in Guatemala, people used to be like, oh, well, how's the internet there? I had worse internet sometimes when I was visiting my parents in New York. So today you can literally do it from anywhere in the world. And before COVID, oh wait, I think Rob, I think we could hear your clicking. I don't know if you could hear me.
Oh, I'm so sorry.
It's okay. No worries. So before COVID struck, I used to do a lot of in-person or in front of people live presentations. But after that, it's amazing how much more you could attract people and talk to people online. You can just speak to, like today, you see we have people from all works of life. So, and everywhere in the world. Before I jump into the presentation, I have the entire presentation for you guys here for free so that you can go through it at your own time. I know that we only have a short period of time. So please go here right now, makingofadaytrader.com, and you could download it completely for free and then follow along. So here's the thing, right? Basics. When you want to learn a new language, so this is really important for you to understand what I'm going to be talking about, right? The financial markets, there is zero barrier to entry. Anybody who has a little bit of money or a lot, doesn't make a difference, can just go into the market. Just because you have a lot of money versus a little, if you know nothing, it doesn't make a difference, right? So a lot of people who have some money, they just jump in the market. So imagine yourself like this, right? Imagine you don't speak a word of Spanish and you enter a room with 6 native Spanish speakers, and they don't speak a word of your native language, and you want to just jump in to a massive conversation with them. Do you think it's possible? Absolutely not. It's completely impossible, right? You cannot understand a single word they're saying because you never studied. You didn't even know how to say hola, mi nombre es, right? But people who have a teeny bit of money think that they could just jump into the market without at all understanding what is in front of them. And of course, they immediately lose. So one thing I recognized, another part was that even if we commit to paying, these extraordinary amounts for these academies, and I've been there, I spent over $20,000, is a lot of times they don't teach you the basics. They don't teach you how to even say hola, mi nombre es. Instead, they throw you into that conversation pit and expect you to follow along. And a lot of times we don't, but we feel like we should. And that's how it all kind of starts to be a downfall, right? So one thing I recognized after losing too much money was that I never got the basics. And I always have this analogy, you cannot put in a window without a wall. And that's what happens, right? We're putting in these windows and they're constantly crashing because we haven't built that wall around it. So that's what we're going to be talking about today, are the basics. And I can guarantee If you apply any of these basics, you will take your trading to the next level. That is for sure. But first and foremost, if you do not have a car to drive in and you want to be a Formula One driver, you're pretty much just dreaming, right? If you want to be a trader and you don't have a charting platform, you're pretty much just messing around and donating your money to the market. Go out there, get yourself a really good, solid platform. When I began trading 11 years ago, there was only like 3 or 4. Today, there's like 30. If you guys have difficulty figuring out which one, I am super happy to help you. I have seen them all. I have practiced on many of them. You can just email me, thetraderchick@gmail.com. I'm happy to help you find the best one. But you do need a platform. That is the only true thing that you'll need to invest in is a platform, because those platforms come with universal indicators. You do not need to buy indicators or other softwares. You've got it all right there. Okay, so let's begin with the basics. The market movements. All right, guys, we know logistically that there are three trends and market movements, right? There's the upward trend, the downward trend, and the sideways trend. Why is the sideways trend so important? Because this is where the majority of our money gets lost, right? This is the chop, the decision area, the exhaustion pattern, whatever you want to call it. This is a transition area, consolidation, a channel. I don't care what you call it, but this is a place where it's flatlined, right? This is a place where the market has absolutely no real direction, and yet we still think that we can outbeat it or outsmart it or predict it, and we can't. And when you can understand that, everything becomes better. So just a really quick rundown. Uptrend. Each pivot is higher than the other pivot. That's it. It's pretty basic. It's a bull market. It's the market trending up. This is where you are buying. This is where you are going long. What does that mean? It means you are entering at a low point, exiting at a high point, and taking that profit in between. Pretty simple stuff, right? This is where you're going long or buying. All right. Now, it's a downtrend. It's where each pivot is lower than the other pivot. Pretty much the same thing. And traders, we make just as much, and if not more, on the downtrend as we do on the uptrend. So don't limit yourself by saying, oh, I don't ever want to go on the downtrend. This is a short. This is where we are selling, shorting the market. Basically, what is it? Entering high, exiting low, taking all that money in between. Don't question it. Don't overthink it. Don't get emotional about, oh, well, somebody is losing while I'm gaining. Who's that somebody? We don't care who that somebody is. They don't care about us. Just do what the technical analysis is telling you. Enter high, exit low, take that money in between, and bam. That's what trading is all about. You're shorting the market. All right. It's the bear market. It's when the market is trending down. Now, let's discuss the consolidation and transition areas, because this is literally the trader's worst enemy. And once we learn how to avoid them, boom, everything changes for us. So this is the consolidation area. This is that chop, exhaustion pattern. There's no real rhythm. There's no real momentum, right? Look at it. There's absolutely no direction. Do you want to be entering this market? No, because this is where you're going to end up losing your money. And why is that? Very easy. Look, guys. Trading is a very emotional activity, correct? And what happens most is that there's two types of traders. And there's a million traders out there, but there's only two types of traders. One is the trend is your friend kind of a trader. And when they're looking at this, they're saying to themselves, oh, the market's been going high, I'm going to continue going long. Then there's the contrarian trader, which is looking at this and they're like, you know what, the market's been going up, it's got to correct, I'm shorting the market. Here's the reality, guys. Those are lies. There's stories. There's nothing backing that up, because the only thing that the market is telling you right here, right now, is that I'm not sure what I'm going to do. So work with me and stay out. Be a pro. When you're a pro, you know that staying out is probably more important than knowing when to get in and knowing when to get out. The most important thing is knowing what is in front of you. And right here, when you're seeing this, get out of that logistics. Oh, but it's doing this, it's doing that. No, what it is doing is flatlining. And you just need to sit out, because do you really want to put your hard-earned money into a market that looks like this? Absolutely not, right? You don't, because even with the strongest trends down, once it consolidates, it could easily change and completely go into a different direction. And they could be small consolidations. It could be large consolidations. It could be continuous consolidations. But when those consolidations happen, stay out, because real traders, pro traders, we don't go in and out 100 times, right? Pro traders are like big game hunters. I don't condone hunting. I don't like hunting, but the reality is it's probably the best analogy. Why? A big game hunter goes out there and knows that they are going for that big game. They're not going to shoot every little mouse and little squirrel. They're going to sit patiently and wait. That's what a pro trader does. They sit and wait. Reality is, pro traders, they might only do like 2-3 trades at most per day, because they know where to stay out. They know where to enter. The most conservative traders are the ones that bring in the most amount of profits and are continuously trading successfully. Okay, so the thing is, we have to recognize these areas, right? We need to understand them, and we have to respect them, because the market respects these areas. And we, as pro traders, individual retail traders, have to respect them as well. What are the areas? There's support and resistance. Okay, this is marked off. You have to mark them off. You have to understand where these areas are, respect them, and hold on to them dearly. To be honest with you, I actually call support and resistance areas my seatbelts. They are my safety gear. Why? Because if you're a Formula One driver, it is a known fact that 25% of Formula One drivers during the racing season have either a horrible accident or a fatality. It's pretty harsh, right? They know that. Now, if you see them getting into a car, do you think they're just going to hop in and go 250 kilometers an hour? No, they have their helmet. They have their fireproof uniform on. They have their seatbelts, right? 95% of quote unquote traders fail, yet they're still not putting on their seatbelts. Resistance, support, these are your seatbelts. This is where your protection gear. This is where you know that you need to stay out, because the market is respecting this area and you need to as well. So what is a resistance area? It is when the market is trending up and boom, it's starting to hit a ceiling over and over and over again. That's a resistance area. You draw it in. You cannot have a mental drawn in area. It's like putting in a mental stop, right? We all know that it's like a mental seatbelt. They're completely ludicrous. You're not going to get in a car and put a mental seatbelt on your baby and then you're going to save that baby in a car crash, right? It's completely impossible. All platforms, all charting softwares have a drawing tool. I don't care if it's just a line or something fancy, but you got to draw those babies in. You got to put on your seatbelt, because the market visits those areas over and over and over again. All right, resistance area. What's a support area? The exact opposite. When your market is heading down really well, it doesn't matter how strong or how weak, boom, and it starts to hit the floor. That's the support area. Draw that in, guys, because that's going to support you. That's going to help you, because you're going to know not to enter that, because you don't know if it's going to break or if it's going to transition. That's not for you to know. What for you to know is when it does the break or when it does transition, that you are looking for the right confirmation, and that's when you get in. All right, support area, that's the ceiling. So then you could draw in those the support is the floor. This is when now you could draw in those areas around the channel, the resistance and the support area. You draw this in. Look at this ugly channel. Yes, it was a strong trend going up, but look at it now. It's crap. You don't know when it's going to break. You don't even know if it's going to break. But you do know that right now I'm sitting out and watching this, right? That's what this is all about. You need to have this, because even if it's a little bit wide and it's doing this ugly behavior, you don't want to put your really hard-earned money into something that is so uncertain, right? You want to put your money in where you know to 90% or more that it's going to go in that direction. Now, a lot of times people say, well, I understand the after fact, but how do you know when it's first forming? And I know that in the beginning you could put in a trade and it could stop you out. That's fine, but you also have to recognize the signs. And this is where I want to really hone in on divergence and reversal patterns, because this will change your life. And the coolest thing of all, it's totally free. It's on every charting platform, and it's for any instrument. When you can understand and spot it, you will not only save yourself a lot of money and not lose, but you will also know when it's broken, when they transition or break out, and that's when you enter the most highest probability trades of all. So let's talk about it. What are reversal patterns? Double tops, triple tops, double bottoms, triple bottoms, head and shoulders, right? These are so important and they are so magical. Like to me, they're magical, right? When I start to spot a reversal pattern, I know to stay out. So there's a big misconception because they're called reversal patterns. The reality is they're not. They are more of like a slowdown pattern, I should say, or a weakening. But at this point, you know, we all know them as reversal patterns. Why? Because when you're seeing a double top, then it could go into a triple top, and then it could continue going into a strong area, right? So the potential is there, but it's not 100% because a lot of people are like, oh, there's a reversal pattern, I'm going to take the reverse. No, that's not the case. You need to see what is happening. And usually it's showing you that the market is slowing down, losing its strength, and you need to sit out. Sit out entirely. Okay. Then when you double it up with divergence, forget about it. That's when you truly, truly win. So what is divergence? All right, look, I use two indicators. I use EMA lines on my price action, and then below that is the MACDs. I love the MACDs because they are the least lagging indicator. So if you're looking here, you can see that right in front of me, I have a very strong, significant double bottom. And look at my MACDs. Even though it's a double bottom in my price action, my MACDs are showing that it's a divergence, right? So what does that mean? It means that the market is totally slowing down and I need to sit out entirely. Now, I want you guys to look here. On my price action, the market is going down, yet my MACDs are already, even before the reversal pattern, are already telling me that there's divergence. I am a huge believer in divergence. It is my holy grail. So I already stay out when I just see divergence because I'm a very conservative trader. I prefer to sit and wait for the super powerful confirmation rather than the maybe it will, maybe it will not work out, right? And then when I see a divergence in reversal pattern, forget it. I'm completely confirmed that I made the right decision, right? So spotting these will completely change everything for you guys. So let's put it all together. First and foremost, again, you could go and grab this entire presentation and go here, makingofadaytrader.com, and then you can go at it on your own time. If you have any questions, you could email me as well, and I'm happy to help. So let's put this all together. How can we apply all of what we just learned, these four very simple, basic understandings of the market? How can we start to really see the difference and really apply it? First and foremost, breaking out of areas. Look, guys, we all know that the breakout trade is probably one of the most highly probable trades out there, right? However, if you don't have your areas drawn in, how are you going to know when it breaks out, right? How are you going to spot that area? Okay, so it's really important to understand this. So if you don't understand what a breakout trade is, I'm going to give it to you very simply in total layman's terms. Imagine that you are living really south, right? You see the lowest point here, that's where you live. And then your best friend or your sister, brother, they live in the highest point. You see it all the way to the right. And they invited you to an impromptu barbecue and you've been there 1,000 times and you're like, yeah, I'm gonna go. You hop into your car, you've been to their house 1,000 times, get on the highway and you're totally jamming, you're driving quickly, but all of a sudden there's a huge construction zone, right? And they shut the highway and there's this construction worker and they're telling you detour, you gotta get off. So what happens here? For me, I totally start to freak out. Why? Because Wyse and Google Maps has not caught on to the construction site and it keeps on sending me back to the highway. What if the detour signs stop? I'm in the middle of, I don't know where I am. I'm totally freaking out. What if they never fix the road and I have to turn around or take these tiny little roads for God knows how long, so on and so forth. Basically, what is happening inside my brain? Total uncertainty, total doubt, and, a little bit of stress. Do I want to be putting money on that when I'm in that kind of a mode? Absolutely not, right? But then all of a sudden, boom, the construction worker says, okay, guys, we fixed the road. You can get back on the highway. Boom, I'm back on the highway that I know so well, and I am back with confidence. That's where I want to put that money in. That's the breakout. So you're in that uncertainty zone and then you're continuing in the same direction. Okay, that's what a breakout is. But if you don't have any detour signs telling you, this is a construction zone, you have to get off, how are you going to remember that you're in a detour mode? How are you going to know what those areas are? And how are you going to know when it's going to break out? Look, the thing is, when we are in the live market with real money in the live market, we are literally going through the same adrenaline pumping mode as a Formula One driver. So if you're in the live market with your real money on the line and you're looking to the left and you don't have anything drawn in, guess what? You're going to be freaking out. You're going to be questioning and doubting yourself and double questioning, why did I go in? Why did I go in? But when you have everything drawn to the left and you know this is the right trade, there was no divergence, everything was good, confirmation, you're feeling safe, you're feeling confident, you know that the chance of that trade working out is way higher than it not, right? And you not guessing. Super important. Okay, this is how I take my trades. So I do everything with the MACDs. And as you can see here, the MACDs are on the bottom. The dashed line, that is the zero line of the MACDs. I don't do anything when it's near the zero line because that shows me there's no strength in the market. So then you can see I have a couple of brown lines on top and a couple of brown lines on the bottom. So when the MACDs, when the price action is super high away from the zero line and there's no divergence, that's when I go in. This is where I entered those trades. After, of course, I have seen that this is a breakout trade, that everything is working out in my favor. There's no divergence. There's all these little moments that I put together. All right. So now I also want to show you a bonus trade because it's not only about the breakout. You can apply this for every kind of a trade. And I call this the instant reaction trade because here's the thing, guys. A new trend trade is super powerful. But again, if you don't have things drawn out, if you don't understand what's going on, you're going to miss it. What's a new trend trade? Here, think of it like this. Imagine you want to go jogging, right? You are all hyped up. You have your jogging clothes on, your jogging shoes, and you're out the door. So if I was going to put money on you, that's where I was going to do it, right? Because that's when I know you have the most amount of energy. It's the same thing for a new trend. In the beginning, it's the strongest amount of energy to continue in that direction. So you want to get in as early as possible. And this is what it's all about. So remember, guys, I have all of this makingofadaytrader.com. So here's the thing. We have absolutely everything we need to take action. Everything. These summits, we have YouTubers, we have books, we have podcasts, right? We have all of this. But then how do you know that you are doing it right? How do you know that you are doing it right? Like where do you get, the idea that yes, you're doing it right because you're following all these different ideas, right? Because all of this is great, but the real question is, how do I really get started? And this isn't a question that I get asked from beginners only. This is from seasoned traders who have been trading for years and still not profitable. They ask me, how do I turn this around? How can I be more profitable consistently? And usually, I have to admit that almost a majority of people, it's because they are lacking simple understanding of the basics, because they're just never taught that, or they feel like they could override it and still end up losing. And it's this simple, right? It's like literally driving a car. So I have a 19-year-old and he just recently learned how to drive a car. And when we first started teaching him how to drive a car, we got in the car and we're like, okay, buckle up. Put your foot on the clutch, on the brake, put the car into first gear and release the clutch. He's like, wait, what? First gear, clutch, what are you talking about? Right? Because he was never taught the basics. If you don't know where the steering wheel is or the clutch or the gear shift, you're not going to know how to go, right? But today, he's getting in the car. It's not even a thought because he was taught the basics. He built in his wall and his windows are not crashing, right? Imagine this. I know that this is a little bit far-fetched, but imagine this. Imagine somebody, this unique person gets in the car. They've never seen a car before. They know nothing about a car. They get in the driver in the passenger seat, and you're like, okay, buckle up. It's gonna save your life, and let's go. And they're like, buckle up. What am I buckling up? I don't understand what they're talking about. If they don't know what a seatbelt is because no one's ever taught them, how are they going to be able to buckle up and have this save their lives, right? We are never born with this information. Everything we know is someone taught us. And when we're not taught that, it's easy to not know the basics, right? And this was literally my own sad truth. Like I mentioned before, I had spent over $20,000 on different academies, conferences, summits, you name it. But I was struggling for years and losing money all the time. I remember sitting in a chat room. At this point, I was already trying to trade for like 2 years, and they were saying, okay, this is a great trade. And I had no idea why, because I was never taught the basics. Every time I asked a question about a basic, what's a divergence? What's a reversal? What's a support area? I was treated as if though I was born with this information, and I'm not, right? Or I was completely ignored altogether. So I ended up losing almost $4,000 in 5 minutes, and it wasn't my first time, right? And at that point, I literally just I quit. I quit. I was so defeated because I felt like I will never understand this. This is not for me, even though I desperately wanted to learn it. However, I bet you everybody in this room, it feels the same. We are all bit by the trading bug, and it never truly stops itching. And do you know why? Because deep down inside, we know that we can do this. We know that we can do this, right? We know that we can do this. And that's all it is. If somebody else is doing it, I know for a fact that I could do it as well. So I decided to get back to the basics, and I completely stripped my chart of all the different indicators, and I used to have 3 monitors. I literally donated 2 of those monitors away, and I slowly started to put in one indicator after another, because there's this misconception, one guru says this one, another guru says this indicator, and you're putting all these on, and I was in constant analysis paralysis. And when I started to remove the indicators and putting some of them back, I realized that some of them have been the cause of my problems. For instance, the Bollinger Bands, Kettler Bands, Fibonacci's, these are just a few that, they're such popular indicators. But when I removed them, oh my goodness, it was like this load lifted off of me, because I was never able to align myself with them. And that's okay, right? That's why not every indicator is for every person. And that's when I started to recognize the basics of the market. And I remember a couple of years back, one of my students said to me, Marina, your trading philosophy and teaching is very similar to Coach John Wooden. And I'm like, who's Coach John Wooden? I've never heard of this guy before. So of course I looked him up, and Coach John Wooden, if any of you have ever heard of him, he was a legendary coach for basketball. I don't think anybody to this day has actually come up to his standards. And his entire teaching way was, when in doubt, get back to the basics. And I mean, this guy was incredible. His team have won 88 national championships, 10 NCAAs. He literally trained the most iconic players ever, right? But it doesn't matter, because every time they started a new season, it will be getting back to the basics. Okay, how to tie your shoe, how to roll up your sock, how to dribble the ball, because it doesn't matter how many national championships or other championships you have won, because if your shoe is untied and you're running down the court and you trip and you sprain your ankle, boom, you're out for the season, because you're not back to the basics. So today, special offer for participants only. I have my introductory course, Bootcamp for Day Trading. You could do this on any apparatus, iPad, pads, tablets, phones, desktops, laptops, you name it. All of this for a one-time price only, $97. One time. This is not a recurring fee, $97. I want you guys to go right now to bootcampfordaytrading.com. Put it in your navigator right now so you can follow along to see everything that is offered with the course. Bootcampfordaytrading.com. Now, what can you get for $97 that brings you that same return on investment? First and foremost, do you guys like to play golf? So me and my husband enjoy playing golf. And when we first moved to Guatemala, we used to go to the golf course, and it was, I don't remember, it was like $29 per person. I kid you not, when we moved 14 years later, which was a year, we moved 6 months ago, it was like $129 per person on the golf course. Okay, and this is Guatemala, so I can't even imagine what it costs in other areas of the world. Going out to lunch, you know what? Again, me and my husband used to go out for fancy lunches, even dinners. And at one point, it was like $75 for both. Today, nothing less than $150 with one glass of wine. Nothing. And you guys know that, right? So let me break this down for you. Bootcamp4daytrading.com. Go with me here so you guys could totally follow along. You will get the simplified day trading package. And like I mentioned before, you cannot trade without a platform. And I know that having a platform can sometimes be arduous and it's a little bit challenging. So I have made a 30-minute platform tutorial setup so that you don't have to worry about the platform. You'll get it set up so that you can get into the fun stuff, the trading stuff. Then we are going to break down the anatomy of the trades, right? The markets, the trends, understanding the upwards trend, downward trend, the sideways trend, and really focusing on the reversals and divergences and putting it all together so you really understand where to spot them, how to spot them, because this has been the greatest aha moments for all of my students. Okay, then we're going to talk about those defensive zone strategies, those respecting those areas, right? Those reversal patterns, how to spot the support resistance area, how to draw them in, understanding divergences, because to me, divergence, like I mentioned earlier, is my holy grail. Okay, and then we're going to talk about the breakout mastery, right? The power of the breakout, because then you'll be able to spot it, how to spot the breakouts, how to avoid the fake out breakouts because they're real. And if you know how to avoid them, you will save yourself a lot of money and you'll get unlimited access to this curriculum. All of this valued at $1,600, all that you'll get right here, including the platform setups, including all of that. So don't take my word for it. And like I mentioned before, we can trade from anywhere in the world. And I have students from all over the world. Here's what some of them have said. Michelle, best money I have ever spent. Derek, the only mentor I know that truly works with you and truly checks your work. Adrian, I am enjoying your bootcamp so much. I'm learning every day. But let me share something really, really, really important with you guys. Remember how I asked you, how do you know you're doing it right? How do you know you're doing it right? So what I've included, no extra price included for one entire month. 1 month, you will have one-on-one mentorship with me, one-on-one coaching. So you could ask me and I am going to be your accountability. You're going to be sharing your charts. And we're going to be talking about if you're doing it right, if you're understanding the charts. This is game changer. Having that mentor will take you to that next level. That is a for sure. And I have the best for last. I also run a live chat room, and it's me. It's no one else but me monitoring it, admitting it. I don't have any like moderators and administrators. I've never traded before, so it's me. And on top of that, on top of the one-on-one, we sit together in the live chat room, implementing everything, taking live trades, everything. Okay, so all of this is valued at $2,600. Like I mentioned, only for live participants. I don't give this offer to anybody else. $97. So go here right now. Bootcamp4daytrading.com. All right, here's what you guys are going to be getting for that $97. Everything in the course. 30 days one-on-one mentorship with me and 30 days of live chat room. And you know what? The reality is this is all less than the price of one average trade. I don't know about you guys, but my average trades are usually between $200 to $400. This is $97. It's the cost of this course will definitely 10x your return on investment, and you can go out for 100 of these meals. But the thing is, because of the mentorship program, I am only able to take on 25 people. That's it. So that I can really give you all of my attention. I only have 25 spots, and there are a lot of people in this room today, and I know that we're going to sell out. So I recommend going right now to bootcamp4daytrading.com. So when you put it in to your navigator, bootcamp4daytrading.com, you're going to come to this order form. And as you can see, one-time payment, $97, but I do have a payment plan of 2 times $59. Even if you do the payment plan, you automatically get everything included right away, and you can start when you are ready, and you'll get the free 1-month chat room. All right. So again, please go here together. Let's do it now. Bootcampfordaytrading.com. Go here, right here. Okay. Would you mind to share some trade statistics? What do you want to share? It's kind of like asking, you know, a driver, can you share your statistics about driving? Can you share me your statistics about your driving? Guys, it's all about the learning process. It's not about me and my statistics. You know, Tom Hanks is one of the greatest actors out there. You want to ask, how much do you earn for acting? And he'll look at you, you know, have you done the work to even ask to get there? Have you done the work? Because a lot of people just want to focus on how much money to make, and they don't want to build any walls. Learn the walls, right? Can you put the link in the chat room? Yes, absolutely. So hang on just 1 second here. Oops. So here it is, bootcampfordaytrading.com. This is where it's going to take you. And I'm going to put it right here, right now. So this is it, bootcampfordaytrading.com, and it will take you to this particular site right here. And there we go. All right, bootcampfordaytrading.com, guys. Honestly, you cannot go wrong, right? I'm here to help you, take you all the way. So again, guys, I just want to say a huge thank you for taking your time to be here today, to share this time with all of us. Thank you so much. Now, would you cover the session, which indicators you use? Hang on a second. So I personally use the EMAs and the MACDs, and I work with tick charts, right? So there is no such thing as a 1-minute tick chart. A tick chart is the time frame, or you have the minute charts. I personally use tick charts, but some platforms don't have tick charts. So that would even out to be about 3 to 5 minute time chart. Because again, some of you people might be interested in swing trading and you're looking at a 5-minute chart, and some of you are day trading looking at a week chart. You guys have to understand the time frame as well, because 1 week chart, if you're doing day trading, is not going to work in your advantage. So we really learn about that as well, because a lot of people really just have issues by not being on the correct time frame. So we go over all of that in the course as well. And the fact that you have me one-on-one, you could ask me all of these questions as well during our sessions together. So again, guys, if you have any questions, please let me know. Thank you so much for being here, for taking that time out. I really, really, the course is it's a self-study course, right? So once you get it, it's all up to you. Whenever you are ready, you can do the course and then do the mentoring after. Can be trade gold? Yes, because we're learning how to read the charts and understanding what is happening. And Leon, you could send me your charts and they are gold, and we go over that particular instrument. Absolutely. All right, and thank you so much. And Rob, thanks for having me, and thank you everybody for being here. So much fun.
Marina,
Thank you so much.
thank you for being here. I just love how you simplify everything so everyone can understand and succeed at the art of trading. So powerful.
Thank you.
Reversal areas and divergence are truly a trader's map to shift in the direction trend, and how you capture those breakouts. Just great stuff. Thank you so much for taking the time out of your day to join us here on Traders Corner. Ladies and gentlemen, that was Marina, the trader chick Villatoro, and she's put her special offer link in the chat box. You can find her at www.thetraderchick.com. Marina, we always love having you. We hope to have you back, and I hope you have a great weekend.
Thank you. Bye, everybody, and thanks, Rob.
No problem. Ladies and gentlemen, our staff at Traders Corner sifts through hundreds of pro traders and brings you the most credible and qualified traders to participate on our shows. And up next is one of the most respected technical analysts in the trading industry, with a high reputation for accuracy in both bull and bear markets. She began her trading career as an equity swing trader in the mid-90s and has since expanded into many other sectors of the market. Her style of trading and market analysis transcends both time as well as market vehicles, making it attractive to investors and traders of stocks, futures, options, ETFs, commodities, and Forex. Here to present the Phoenix, a trend trader's best kept secret, is Toni Hansen. Welcome back to Traders Corner, Toni.
Good day, everyone. I hope you're having a wonderfully educational weekend so far. Thank you for having me. I am going to share with you one of my favorite strategies that is excellent for newer traders, as well as those that have been trading for years as well. As Rob said, I've started back in the mid 1990s, and back then there wasn't a lot as far as education goes for the markets. I mean, I know many of you have probably remember that time. I don't know how many of you have just started trading and how many of you have been trading for years, but the fun thing about the markets is that once you learn the core values of technical analysis and some of the core strategies out there, it doesn't really matter what market you're going to trade. You can take a strategy and apply it to the gold markets. You can apply it to the futures markets, Forex, whatever you want to trade. So I started out in stocks, and from there branched out into futures, then Forex, trading a lot of different strategies over the years and different time frames, just depending upon where I was in the world and what those time zones were and what was going on in my life that allowed for me to trade during certain times versus not others. So the pattern I'm going to share with you here today is one that I did develop way back in the 1990s, and it's something that I've spent a good 25 years or so really perfecting. There's a lot of variations on this strategy, but what I want to share with you is the core of this setup. So this is a reversal strategy, but it's not a pure reversal. We're not trying to time the pivot high or the pivot low. There's other strategies for that. This is one that is better suited for newer traders, where you're basically just trying to get in on some of those initial reversals. And it's one I've taught to the CME group when I'm doing their educational events. I have focused upon it on analysis on CNBC, on Jim Cramer's show. So you're going to see that this is something that really held up over the years. And when it comes to trading, there's no end point in your educational experience. There's no point that you're going to say, oh, hey, I know everything. Even to this day, I continue to have aha moments just going back and studying my trading journal and the trades that I've taken and exploring different variables and how they impact the particular strategies that I'm focused on. So we're going to start by taking a look at the Phoenix here. So this is a pattern that truly is one that is rising from the ashes. And what we are looking at is, this is just the core template for that strategy. Let me grab my pen here. And what we're looking at is really just something that has had a nice strong downside move over here, and then we're getting these pivots coming off. Now, a really good Phoenix is going to break that downtrend channel and then go into the template that we're seeing. So this is something you can take a screenshot of and print it out, save it, and stick it up on your monitor to keep an eye on as you are progressing through the trade. Yeah, this is just the basics of this. There's a lot of in-depth details. So when we talk about looking at a Phoenix strategy, my style of market analysis is one that it developed really slowly over the years. There wasn't much out there as far as education. You know, people used moving averages, but we were really just transitioning from the floor at that time. So there wasn't a lot developed as far as indicators. So when I learned to trade focusing upon pure market action. And while I tried out a lot of indicators over the years, I found that for the most part, it's tricky for traders to learn to use some of these indicators because, yeah, they work in certain circumstances, but if you're just relying on it by itself, you're going to end up failing. In fact, if you go to Google and you type in a core strategy like a head and shoulders, right? What you're going to find is that the way that they outline the strategy and how to trade it, it looks great if you look at the examples that they pulled. But you know what? If you go and you try to apply that in the live markets and you're only using the triggers that they're showing you, like on Investopedia, you're basically doomed to fail because I've gone through and looked at all of them that they've used, and over time, there's been more of them that end up failing than end up working out. When we're looking at the Phoenix, what we're really looking at is something that is coming off of a major support level, and we're looking for the start and continuation of a brand new trend. So you're going to be developing a first initial new high and then new low, and then you're going to be moving into those higher highs. This is not Elliott wave. When I started trading, I didn't know anything about Elliott wave, but you are going to find a lot of discussions regarding wave count. So the way that I look at waves is that I tend to focus on 2-wave movements versus 3-wave movements. So if we're looking at, say, our pullback in here, and I wish this highlighter had another color. Let me see here. Nope, I can just do yellow. So what we're looking at though is a core wave count within the Phoenix is you're going to have 2 waves up. Let me kind of draw it down here. We can see the colors. And then you're going to get a 2-wave correction. And then what we're looking for is a 2-wave continuation. Now, what's really interesting about wave counting is if we look at this portion right here and right here, we could also get something that forms a 3-wave movement. But if you add this correction to this correction, it will take the same amount of time as your little kneecap zone in here. So when you're looking at 3-wave development, that can unfold in a lot of ways. You can get something that has like the shorter little corrections like that, and then you've got 3 waves, but coming back down, it could go like this. And this correction here and here are really just your 2 corrections here and here. You're just looking at them tilted versus sideways and any variation in between. What I'm going to show you today is our core Phoenix. So we're not going to get into too many of the different variables right now. And I want you to just be able to walk away with a core understanding of this that you can use as a template. So here's an example. This is from gold this past month. This was a core trade that set up really early in the morning. A lot of times gold starts to move before many of the other markets really do. And what we're looking at is an extended trend on the downside with our Phoenix, that 2-wave pull up. And ideally in that pull, what you're going to see is it try to break that channel. So we want this to push through that channel. You can get a Phoenix that is still within this channel. So for example, down here, you might get like a little baby Phoenix, but ones that break that channel itself have a higher probability of creating a reversal that's going to continue on the upside, as opposed to something where you get your Phoenix, it's just a nice 2-wave move up, but then it continues back on the downside. It's still excellent return compared to what your risk is going to be, but to get that fuller trend reversal, your probability of success is going to be higher when that channel is breaking first. And you get that secondary pullback with your two-wave movement here. Now, when we're looking at entry triggers on something like this, a lot of traders look at breakouts and they'll take a breakout like this as their entry trigger. They'll place their stop under the low of that zone of congestion or that zone of correction. The problem with this is that this often is a level where you will get a break and then you'll get a pullback into the range. And it basically can create a trap. So when we're looking at the Phoenix strategy, we're coming up here, we've got our nice little two-wave move up, our two-wave correction, and then we're looking for that two waves of continuation. There's a couple of things that we can look at that are going to improve our return compared to what our risk is, as well as the probability of being able to walk away with gains even if the setup ultimately fails. Nobody wants to see a setup fail, obviously, but there's going to be situations where, you know, things might not be working out as great on the larger time frames. So maybe the larger time frame is still predominantly a bearish move. Maybe this is still within a larger downtrend channel. And even though it's breaking your smaller channel, the bigger trend is your dominant trend. So what I'm looking for as an entry trigger on this strategy is going to be with these two waves here. Look at this second wave right here. And when you connect your highs within that channel, that break of that channel is my entry trigger. Now for a stop, I am not using under this low, because in a core Phoenix, this is something that is going to start taking off pretty quickly in most situations. So what we want to do for a stop on this is we're going to take that original low over here and we are going to pull that on up so that we get this trend line that's forming. And what this does is that as this is pulling higher, so is our stop. So in something that ultimately might go like this and have a more difficult time really, you know, pulling up and ends up breaking that stop level, you can still walk away with a break-even trade. And a lot of times I use what I call advanced trade management. So if I see a two-wave move up like this, where the momentum is now shifting compared to here, I'm getting more aggressive with managing the trade anyways and protecting part of the position on that smaller channel break, so that even if this comes back and breaks that channel, I am still walking away with profits. They might not be a lot, but it still adds up over time. And if I was taking a channel break as my entry trigger, well, I would not be able to do that, because I would have an entry here, and even with the stop that's being adjusted, you're looking at almost nothing as far as gains go before that would pull in and correct. So it's really important to be willing to take some of those earlier breakout moves, but then use correct stop placement. Now there's a couple of things here that are going to increase my probability as well. And they're going to tell me, hey, am I too early to take this setup, or is it too late? And what you'll notice down on this chart of gold here is that I've got these fib time extensions. And you can just eyeball this as well, but to see it more clearly, I've put the fib time extensions on here. So what I want to see is if we're looking at the distance between those two highs right here, here and here, and then we're looking at the distance between that second high and where it breaks out. Ideally, I want that breakout taking place between that 100% time extension between the first and second high, and then the second and third high, and up to about a third more. So if you're looking at A and dividing it by 3, then we can add that little zone on there. But I want to see that confirmation. at that point with momentum coming in. So what this means is that if we have something that is triggering a breakout earlier than that, like I'm drawing up in here, let me grab my pen. So if we've got something that's triggering a breakout where A is smaller than B, then you got a better chance that that is going to be a trap. So it might go and put in a smaller measured move, but it increases the chances that that's going to come back in. So when we're looking at this really simple strategy here, what we want are the two wave moves up, the two wave of correction, but then looking at the distance between those highs so that when this tries to break here, we want that confirming where A and B are really close. Now the trigger for the setup is down here. Here's my entry point. So this pivot point is also really crucial because if we look at the distance from here to here to here, we cut this in half. I want that last pivot for the second pullback to be after that 50% level. So that's going to create a little bit of a slower overall correction that second time around, so that when that triggers, I've got less of a chance of a fake breakout. There's a lot of ways that we can manipulate this entry by looking at different time frames. So we can go down to a smaller time frame to look at another setup as well. You can also watch for the wave count in here. So if you've got a two wave movement in here, this is your channel break for that movement. Well, you might still get a smaller channel break right here where you can narrow down that entry point even more. So on a move like this over here, I've got something else added on. I've got a Fibonacci fan, and we'll discuss that here in a little bit as I move a little bit more through our class. It's one of those tools that works great to give you that extra confirmation on the time development, but it is one where there are about half a dozen rules as to how I draw that fib fan. So in this particular example, you'll notice that I went to the second high here. And what I was looking for then was for this to hold up above a retracement of 3/4. And as this pulled over in here, your trigger point, if you went down to a smaller time frame, would have been that very last little pull. But if you used it on the bigger time frame, your trigger point would be right here. And again, the stop would be pulling up along here with you. Clear this. And I'm going to show you as many examples as I can here today so that we also have time for questions. So here is another one. This is just a recent one here over the last week or so as well. And what you'll notice over here is that we've got that channel break, nice kind of shift in momentum, pops up, breaks that channel, has that secondary pull up here. And what you'll notice is that these two waves on the upside are really comparable in terms of the momentum and the size. So when we're looking at that, if one of them is like weaker and then it has a second wave that's stronger, that's going to be a more difficult Phoenix to trade. If the first one is stronger and the second one is weaker, again, less of a likelihood of getting a stronger Phoenix. So if you want to stick to the core setup to begin with, as you're learning the strategy, you want each of those waves to be about the same. A bigger time frame for me, it varies. I look at everything from a 2-second chart to an 80,000 tick chart, and sometimes daily or weekly. It just depends upon where things are in bigger trends. And if I'm looking to swing trade something, or if I'm just focusing upon day trades. One thing you guys want to be careful of when you're looking at tick charts versus time frame charts, and this was something I heard from a previous presenter where we're looking at making that change between using a tick chart and a time frame chart, there's no core translation. So if you're looking at like 100 tick chart, that could be a 30-minute time frame chart on a thin stock, or it could be a 2-second time frame where the movement takes place on a stock that is really high volume. So there's not a core translation, but if you're trading something over time, over and over again, you're going to be able to see, hey, you know what? A 2000 tick chart on the NASDAQ roughly translates to, like, say, a 5-minute time frame. So as volatility comes in, though, your 2000 tick chart might apply to a smaller time frame. And if it's really slow, it can apply to a bigger time frame. So don't get stuck on what that, exact translation is there. But the strategy for the Phoenix can take place on every single time frame. So it doesn't matter if you're trading tick charts or you're trading a time frame chart like a 5-minute chart. It doesn't matter. They're all going to develop the same strategies. The thing that is going to be different, though, is that your momentum on a tick chart might look different compared to the momentum on a time frame chart. So if you got something that's coming up really steeply on a time frame chart with the 2-wave movement, and then you're getting that 2-wave correction, well, that can impact how that breaks out. It can make it harder to break out with as strong of momentum. So it might look like this on a tick chart, but then look like this on a time frame chart. So you do want to pay attention to both of those. I'm not going to get into that too much here today just because we don't have the time. So it is something, though, to kind of keep in mind there as you're looking at these. Now, on the correction here, another thing that we can watch is our volume. So you'll notice down here that volume really dried up compared to earlier, especially as this was coming into the lows. What's nice with the lows here is that you see some stronger volume to start with, and then as each kind of new low is happening, you're seeing lesser and lesser volume spikes. So it's not an extreme example of that, but having that shift in volume as it's moving lower and putting in the lower lows, that can be a really good sign of your trend exhaustion. So what we then want to see with the Phoenix is that on these two corrections, volume really dries up. And a lot of times right before a trigger happens, we will have the lightest volume of the day if you're day trading, and the lightest volume of the month if you're swing trading. Now, our breakout here, ideal spacing is going to be where A and B are about the same. So in this particular one, B is a little bit smaller here, and this was a 10-second chart. So on your tick chart, you can also double check and say, hey, you know what, is your tick chart showing comparable time development between the highs? Because it might just be off on your time frame chart and still be perfect on your tick chart. And as long as one of them has that time development, you're basically good to go. So on this, our entry trigger is the break of that second channel, and our stop is trailing underneath that channel. So what you'll notice is that even when something maybe struggles to really get going terribly far, you can still wind up with a break-even trade or a scratch or some minor gains or very minor losses, but you're not as likely to get a full loss on the trade. So keep in mind that strategy as far as using this, because we are not going to be going and taking a break of this larger channel as our entry point. The only time I would do that would be if this is really choppy and I can't really see the movements very easily within it. then I would take that channel break. But I would also be aware that it could go and do a fake move where we could get a move up, flush, and then the continuation. So that's your risk of when something is just chopping around really tight in a range. So be prepared for that to happen. How long have I been trading? Since 1996. I ran a trading room for about 10 years full time. Now I just teach a class an hour a day during the day. So I do live mentoring. I am not a retail trader. No, I have always had my own company and just worked for myself basically. Yes, trading from Main Street. That was the trading room that I ran for, well, gosh, it was 10 to 12 years. So here's another example of, I'll talk about that more here if I have time here in a little bit. But here's another example of our Phoenix. So you can see coming in here, we're getting a channel break, but the channel break isn't as the two waves are coming up. It's as the Phoenix itself is forming. So notice our volume dropping here. And as we're coming into this little check mark or correction, here's the entry trigger. So using that second correction here as the trigger. And on this one, stop placement would be trailing along over here. Now, you'll notice that this had a harder time getting that full momentum coming out of it, and that was because of the strong momentum starting. So when you have a strong starting two waves, if that is going and doing a breakout, your odds are greater that it's going to have a slower movement as that is coming up. So if this has a slower start with the two waves, then you've got a better chance of your momentum soaring as that's breaking out. So you're just looking at the different levels. And also when it goes into a bull flag to continue the trend, look at your time development, because you'll often see that these zones of congestion take the exact same amount of time to form before you'll get your continuation. So that's something to watch for when you're looking at your bull flags. And a lot of the tricks that you're using for a Phoenix are those that are going to translate for your bull flag. So here, what you can see is that this is just your time frame chart versus your tick chart. And you can see where that little Phoenix is in terms of the bigger trend. So you really are coming off of some of those lows, but you'll notice on the bigger trend, this is still in that channel. So it didn't break the channel, which does make it easier to still pull back down. You can get a really nice start, but it can have a harder time continuing with the reversal. So here's another example. And this one shows you where you do get that break in the channel. Again, really strong momentum to start with. So a little bit weaker as it's getting going, but it still is able to do a bigger trend reversal because you've got a nice two-wave measured move here on that bigger 2000 tick chart. So you're really getting a setup that is taking place on that bigger time frame because you've got that exhaustion there, and then you've got the larger reversal on that bigger time frame with your smaller Phoenix as the entry trigger. So throughout this, I'm going to show you some of my trades too, and a lot of these we've done live. We only meet these days. I got talked back into doing live education, which I love because as you're teaching, you're also learning, and it's helping like reinforce values and make you think through things. By 7 years old, thank you. But I'm still 30, Rob. But what we're looking at here is that you can use your smaller time frame entry, and then as you get smaller setups, like this little two-wave correction here, you can go and build into your trades. So in this case, my concern was that, you know, this still pulled back with a little bit stronger momentum here, and see how this was really strong coming out? So my concern on this trade was, is it really going to be able to fully turn around and reverse? Or am I just looking at something of, yeah, I've got a nice little scalp on here, but it might not be something that is going to fully turn around. So when this is coming up, I want to watch that momentum as it comes into my target levels. And my typical target is 100% extension for the price. So in this case, because it was kind of shifting in here, I protected most of that position. Now I could go in and take another trade again if it formed a phoenix or it formed a bull flag over here. But you can base how you kind of trade based upon what your risk levels are. Do you want to hold through correction, or do you want to just do in and out, or do you want to hold partials for a continuation? It really just depends upon what the larger time frames look like. So here's an example. This is one where the larger time frame really didn't look that great. So I traded this as just more of a scalp, just pulling up and looking for a target at 76.4% price extension instead. And what I'm doing really is I'm also looking at those measured moves. So here's your initial trigger here. This has a little two-wave correction that you can add into, but I'm using a fib fan from my low to my high here. Here's my two-wave correction. It's kind of messy. Here's the two-wave move up. If you use that channel break, your entry trigger would be over here. So look at the difference in terms of where that stop placement would be compared to what we're looking at for target levels. On the next chart, I'll show you the larger time frame. So what you'll notice is that on this time frame, we've got overall a stronger momentum move on the downside. We've got a shorter kind of secondary move where things are shifting momentum here. So this is where that smaller phoenix is taking place, but it could just as easily be a bear flag in that larger time frame. So it might not be able to give me a really good reversal coming off of that level. So that's when I want to get more aggressive with my trade management. Is the larger time frame in my favor? This is a 200 tick chart. This is a 5-second chart. Or is it something that, hey, it's really pretty set up on the smaller time frame, but bigger time frame's not really working for me. So watch out for that. So you guys will notice that I have a Fibonacci fan on here. NinjaTrader doesn't have fib fans built in. So if you want to add them, I've created a script that can plug in to NinjaTrader. You can get it at tonyhansen.com/ninja, and it's called Trade Tracker Pro, and it will add those fib fans on to your charts for you and has all of the same dynamics as a typical indicator. So here's another example, fairly recent here. This is actually as we were heading into the close yesterday. So what you can see is that here we have 3 waves up instead of 2, but it could have just as easily done the 2 waves like this. So we're just looking at that variation. We've got the shift in momentum. This is another reversal strategy. It's called a 2B. And I use that as my initial trigger on this. And coming in to the end of the day, you'll notice A is a little bit bigger than B. The second pullback is a little bit stunted. So it's not quite as pretty as some of the template ones that we looked at. So the question is, can this hold and give us basically an inverse head and shoulders where you've got a smaller little phoenix right here to help drive that on Sunday evening? Now, an inverse head and shoulders as a phoenix is not as strong of a setup as when we get the 2-wave correction. So if it's coming in and it's forming an inverse head and shoulders as your continuation pattern, it can get stuck a little bit more easily. So that is a concern as we head into Sunday that we would need to keep an eye on here. And in terms of the time development on an inverse head and shoulders, you're going to go across here. But when you've got these two pivot highs, we split that in half. So now this becomes A, this becomes B, and this is your do or die point to get that going. Ninja Trader has a number of ways that you can use their platform. So you can pay for the platform itself and get lower commissions, or you can like outright pay for it rather, or you can pay for it per month. And so there's a little bit of a difference in terms of the commission scale on it. Here is again another example from this summer. And when this has a really extreme momentum move up, I default to the second high for my fib bands. And this is something that I'll teach you guys, in more in depth here. For those of you that want to continue to study with me, but what you'll notice is that a lot of our fib bands are also going to help guide some of those target levels too. So here, your A and B, right about the same, really nice two-wave correction, but the upside move is really extreme. So that means that this can create a more tricky kind of continuation where it's just not quite as fast, but it doesn't mean that the trend is not going to continue. It just means that when it's getting started over here, it can be hard to get that same momentum coming out of it. So it's actually good to get it going like this instead. Let me see here. Clear this. So here's another one. This is another recent trade of mine. And what you'll see here is I'd actually taken this based upon a little Phoenix here where my entry really wasn't as great, but it's because I had a bigger time frame in my favor. So in a normal Phoenix, you're going to get that nice little secondary correction, and that would be your entry trigger. I was more aggressive on this. So I didn't have as pretty of a setup over here. So what I did was, as I was coming into some of the initial resistance levels, you can see small measured moves, change in momentum here. I went ahead and I protected most of the position. I can't remember here if I took out all of it or not, but then I used the bigger Phoenix here to go ahead and get back into it again. Now at this point, really extreme secondary move down though. This was another fib shift rule where I hooked up my 50% fan with this low because it pulled back about 50%. That gives me my 76.4% zone. And because this momentum was so strong, I didn't use the break of that channel as the entry trigger. I instead used the break of this channel. And just a market order. So sometimes what you can do is you can put your stop order as a buy and just kind of pull it on down. I didn't do that in this case, but that's usually going to give you a better price than just hitting a pure market order. So initial target level coming into 100%. We had a little bit of a shift in momentum. We were coming up to that 27.2, 23.6% fib fan zone, as well as the breakdown zone over here. So I did protect partials there. And again, over here, if I recall correctly, this continued on the upside after this point, but this was some of my initial trade management on there. And if you're just scalping, then that's your target zone. If your second wave up is stronger than your first, I'm usually going to be aiming for a 123.6% target versus 100% price extension. If it is weaker, then I'm going to look for 76.4% as a target. Let me clear that here. So like all of the other presenters you've had, I do have continuing education to ask you guys, or to offer you guys. And this is an on-demand class it took place over the course of 3 weekends. And then I had followed through with discussing the Phoenix live for several weeks after that, but now it's available on demand. So if you like what you've seen so far and you want to get into even more of the details, then go ahead and check out this course. And I will offer the same thing I did to the people that took it the first time around, where you can come in and join me during the trading day and learn a little bit about the markets live. And a lot of times before the class wraps up, we go from 12 to 1. So a lot of times before the class wraps up, I'm going to be giving you an outlook on what's going to happen in the rest of the day and the strategies to watch for the rest of the day as well. So we've got details on the Phoenix, the different variations of the Phoenix, templates, and a step-by-step walkthrough of live trades and analysis. And I also discussed the reverse strategy, which is the avalanche. So I've got a couple of minutes here to answer some of your questions. So I'm going to go back through this. And let's see here. No worries about English, not as a first language. You are doing great. I'm just envious of polyglots. I can do a little bit of Spanish and Turkish, but that's about it. How do I see the NASDAQ 100? So if you're looking at trading futures, then I recommend starting by using the micros, and they even have micros of oil now, which is something I'd asked them about for years, but they do have micro contracts of all of those so that you can keep your risk smaller, just like when you're trading stocks and you start out with smaller share size, so that you can really focus more upon trading correctly than worrying quite as much about what you're risking on the trade. Futures markets don't really have a huge benefit over stocks other than just your taxes can be easier when you're trading futures, which is also an incentive for me as well. Let's see. How can we get our presentation? Rob, can you answer that question? Are the recordings going to be sent out to everybody?
I can. It's a very common question that I usually answer a bunch of times. All of our broadcasts are recorded. An email should follow at some point with a link to it. They will be available from our website at a certain point, and we also have a YouTube channel.
So basically, pay attention to your emails, you guys. Do I do volume analysis? Absolutely. So volume can be something that's really helpful when you're looking at your Phoenixes. And so we do discuss volume in depth in that extended 3-week course there. It does not cover option strategies per se, but what it does do is it gives you an understanding of which type of time values you need for options. So it helps you understand, hey, these are the do or die points where the breakout is going to be most likely, and making sure that you're actually getting into the correct contract for your options. So that's a core piece of this. Absolutely. I'm not going to go into like put and call strategies per se, but I'm going to teach you the time development so that you are getting into the correct expirations. Let's see, what other questions do you guys have? One, I'm just kind of scrolling up as discussing what indicators. So like I mentioned, I mean, when I first started trading, I used a number of different types of indicators just to kind of play around with, like the commodity channel index or CCI, Bollinger Bands, moving averages. These days, I only use Fibonacci, and I use it kind of like a crutch to help traders understand time development and price development actions. And so it is something that is well, that's what it is. It's a crutch to help you make sure your timing is correct and help you with correct stop placement and moving your stops. So it's really, really useful in that regards. All right, Rob. Well, thank you everyone for inviting me here today. And I hope that you all learn a lot as you continue. As Vineet asks, is there going to be more focused on intraday charts? On every time frame. You guys, like I said, there's no core time frame that is better than another as far as strategies go. Your intraday charts are just going to give you more setups because their markets are moving faster and your trends are moving faster. All right, take care, everyone, and I'll see you next time. And I look forward with working with some of you that are going to go ahead and grab this course.
Hey, thank you so much, Toni. Great information. The Phoenix, a trend trader's best kept secret. Great presentation. I want to thank you for sharing this incredible strategy with our audience today. Our entries are so crucial, and not getting in too early or too late can be the difference between a winner or a loser. And I can see why you're one of the most respected technical analysts and traders in the industry. The Phoenix is just, it took me a couple times to see in your presentation to really grasp it, but I can't wait to try to start utilizing it in my trading. Ladies and gentlemen, that was Mrs. Toni Hansen. We put her special link in the chat box, and you can always find her at tonihansen.com. She's a true professional of the industry, and Toni's reputation for accuracy is unparalleled. Thanks again, Toni, for joining us today. Please come back and see us, and enjoy your weekend.
Thanks.
Well, ladies and gentlemen, I mentioned at the top of the show that we had a great lineup, and our next presenter is no exception. He is an E-mini S&P futures trader with a penchant for sharing his knowledge and helping other traders develop reliable trading systems for consistent returns. After years of developing and refining his remarkable trading system and trading style, he began his coaching career in 2020 and was quickly recruited to the Day Trade Like a Pro community, where he coached and ran a very successful live trading room. Subsequently, he's moved on to his own platform to continue supporting active day traders with some of the most incredible levels and signals available. Here to present the S&P 500 roadmap, how to develop an accurate daily trading plan for consistent results, is Mr. Justin Givler of the S&P roadmap. Welcome to Traders Corner, Justin.
Awesome. Thanks so much, Rob. Appreciate you having me on here. This is my first time with your webinar series, so appreciate you having me here.
I'm aware, and I will be sitting in the background if you have any questions or need any help.
Perfect. Thanks so much. All right, guys. Well, welcome in. I have maybe a different take this morning than the previous presenters, so it's actually a pretty nice little lineup here. You know, Alla talked about Fibonacci. Marina was here talking about, well, one of my favorite indicators, and that's looking for divergence and reversal patterns. And Toni had some great information on looking at a very specific trading strategy. But we haven't heard anything today about what do we do when we sit down in front of the charts and get ready for the trading morning. And this is really specific to futures traders. Trading the S&P, trading the NASDAQ, the Russell, the Dow. You want to have some type of consistent trade plan every single morning, following a consistent kind of methodology, so that you have something to rely on every single morning. And so that's what I do here. I'm going to be presenting on the S&P roadmap, which is a new service that I started back in June of this year. And what we're doing is we're planning out and putting the best levels on the charts, looking for the best signals for potential rotations in the market, not only on the short time frames, but on the bigger time frame from a zoomed out perspective, to give us that context when we get into the trading morning. So let's go right into it here. I do need to, I guess I'll first say, if you want to find any more information about this as I'm going through the presentation, feel free to ask questions. I look forward to that. But you can go to www.sproadmap.com and get all the information as to what we do, what products and services we offer. I'm not going to spend too much time on the selling side of things here. I want to just share with you my process. that I follow, and I have been following for probably over 3, 4, 5 years now, to give me a really strong foundation for my trading day. So of course, there's the futures trading risk disclosure. This is educational. You know, you could lose all or more of your initial capital. And let's go ahead and go right into it. So why would we pre-market plan? Why would we have a roadmap? I've already basically touched on that, but let's go ahead and go through. So you need to have a set of conditions to trade within every single trading day. If you just come to the charts and you're like, oh, I just like this, I'm just going to go in, or oh, it looks really strong, I'm just going to buy, I guarantee you, you'll probably make some money, you probably lose some money, but in the long run, you're not going to have a consistent plan that's going to lead to consistent results. So you want to have these conditions every single morning before you ever decide to go ahead and place some risk on in the market. So we want to know the areas in the chart that are going to be trouble for the bulls and the bears, all right, ahead of time, so that we're aware as the charts are moving in real time, we know those areas that we're coming into. So we want to know what the higher time frames are telling us. This is giving us our context for the short time frames as we're trading on, say, you know, a 1 minute chart, a tick chart, a 3 minute chart, what have you, right? So we're going to use all of this to create a bias for the trading day and a plan for what we want to do before we start putting that risk on. So we're going to move through this pretty quickly, and then really what I want to do is go to the actual charts and start looking at how we map all this stuff out, and maybe even look at some of the results we've seen, you know, with our process over the last 1, 2, 3 months now that we've been doing the trade room. So first and foremost, you want to mark the times of announced news on your short time frame charts. So obviously there's no way to know when some unpredictable news is going to come out. China's going to do something, Russia just did something, you know, some big explosion just happened. We really can't predict that, but all of the planned news events, whether it's, you know, non-farm payroll, or there's some type of announcement at 7 a.m., or we know that, say, Powell, or there's going to be some Fed speak coming up at the 11 a.m. hour. We want to know about that, because chances are when that news event and when that news is released, there's going to be a jump in volatility on the charts. So the last thing you want to do is go ahead and put a trade on right at the instant that there's a huge jump and a spike in volatility. The market could go up 10 points, down 20 points, up 50 points, or whatever, what have you, all within a few seconds, and you don't want it to jump your stop. Of course, there's always the possibility that the market's going to jump and actually jump your profit area and actually fill you at a much more favorable area. But if you have any experience in the markets, a lot of times what you find is it's Murphy's Law, and it ends up jumping your stop and taking 2, 3, 4, 5 times more than you originally anticipated. So being aware of those news events is really important. So what I do every morning is I go right up to my 1 minute chart, my 3 minute chart, and I put a nice vertical line giving me a visual cue as to when that news event is going to occur. So when I'm trading on that short time frame, I see that coming up and I'm aware of it. Okay. Second thing that I do is I go up to my daily and my weekly candlestick charts, and I read and interpret what those candlesticks are saying. There's a lot of really good information that you can take just out of a candlestick, not looking at, you know, the different indicators or anything else like that. And that information is going to help you. If you're an intraday trader, then we need to know what that previous daily signal or daily candlestick is saying. What is that previous weekly candlestick saying? And where are we in relation to the daily highs, the daily lows, the weekly highs, the weekly lows, and the median point, which we will get into here in just a few minutes. So outside of that, we then go in and ID and mark the most relevant high time frame, and you see MTF multiple time frame signals. So if we start to get some clues on the daily for a certain signal, And in this case, we're talking about divergence. So that's why I said, you know, having Marina talk about divergence just a speak or two ago was actually really opportune for the presentation here. But we want to see, does that daily start to show some type of divergence signal? Is the 4-hour time frame agreeing with it? Is the weekly agreeing? Is our hourly agreeing? Because when all 3 or 4 of those higher time frames start to line up, and you know, you don't have to just take my word for it. You can just go look at the historical charts, or I'm going to go ahead and share with you guys some of the stuff we've seen over the last 2 or 3 months. When all 3 of these higher time frames start to align with that divergence signal, that's when you have a better opportunity for a large push in the market. You're never guaranteed anything in trading, and just because you have signals lining up doesn't mean you're guaranteed a big push. But when a big push happens, that's typically what's leading the push. Okay. Next thing, and this is again going back to Alla's presentation this morning, you know, we want to map out the larger Fibonacci legs, because typically we see the market respect some of those key Fibonacci retracement levels and that psychological 50% retracement level. So we want to look at where we are in relation to these larger Fibonacci or retracement legs, if you will. And then we want to map out all of the relevant levels that we're seeing in terms of price structure, or what I call scaffolding on the market. And then map out those major naked swings. So another thing that I've seen over the years is whenever there's a major naked swing sitting on the chart, that is a strong area of support and resistance. So we go ahead and see, are there anything sticking out, especially from the 60-minute chart up, that we might be pushing and testing into from the bullish or the bearish side of things. And we also want to consider what I'll call my daily power levels. And this is going back to what I said a couple minutes ago, and that is that looking at that previous daily candlestick, it's going to give you some really strong levels that we want to be aware of as intraday traders. So we'll look into that in just a couple minutes when we get to the actual charts. And then finally, just before the open, you want to jump down to that short time frame chart. For me, I'm typically dealing with a 512 tick, a 3-minute, and a 30-minute chart, and those are what I consider my short time frames. Maybe a 10, but I typically like those first 3 that I mentioned, and see if maybe there are any other signals down right in the smaller time frames there that might give you kind of an indication of movement coming into the open. Okay, so once all this stuff is mapped out and we have it all on our charts, then we want to have some type of bias or plan for what we want to do, you know, with what the market is going to give us, right? So the market, and I think this is the next bullet point here, the market is always changing, and we need to basically adapt to the new conditions and trade accordingly. So it doesn't matter if you have a strong conviction and you have signals and things that work, say 90% of the time, whatever it is, it doesn't matter if all that lines up. The market can throw a curveball and you have to be ready to adapt to it, right? This means we need contingency plans for when things aren't happening the way we expect, right? So we'll have the plan for, hey, look, everything's lining up for a potential push this way. But that doesn't mean that if the market then disrespects the plan we have and it breaks levels that we put on the chart, that we're not going to change our hats and go from a bull to a bear or a bear to a bull. It's all going to come down to what the market actually does and what levels it's respecting. So this is all very important. If you want to be a successful intraday trader, you're going to have to be ready to change your bias when new information comes in, when levels start to become disrespected and the market does something you maybe didn't expect. And remember that all trading is just a series of if-then statements. So you're basically just telling yourself, look, if this level can hold, then this is what we're going to do. If that level doesn't hold, well, then maybe we'll do this, right? So that's basically all it is. And then it's from there managing risk, which is the most important part of trading, which we don't have time to get to today. So without further ado, let's actually go to the actual charts here and go through that list that I mentioned. And one of the first things is, like I said, on the shortest time frames, and really the shortest time frame that I look at, I can't bring up the tick chart. If we look at a tick chart, the unfortunate part about the way I deal with NinjaTrader here, the unfortunate part is if I put a vertical line on the chart out in the future at, say, just call it 1747 here, the tick chart, for whatever reason, because it's not a time-based chart, it's based on volume, it ends up shifting. So I have to stick with a time-based chart. In my case, it would be a 3-minute chart. So I go right to the 3-minute chart, and I'll put a vertical line on the chart right at the time that I'm expecting the news event, right? So the first thing I do before I even consider any type of analysis is I go to my charts and I mark the vertical line where the potential news event is going to be coming up. So let's say we're coming into the open and we know that right around this time there's going to be a news event. I go ahead and put that vertical line up there. I also put it on my 1-minute chart as well, which is a chart that I don't share on my live stream every morning, but we've got it on the 3-minute here, so that, look, if you're trading and you're getting caught up in all the chop going on a short time frame, you get that visual cue that, hey, we're coming into a time when I might want to be a little bit more cautious about putting a trade on, or if I'm in a live trade, maybe I should get careful here, tighten up my stop coming into that news event. So that's the first thing that I do. And then I go right up to my higher time frames, okay? And in my higher time frames, this is where I'm starting to map out and look for the most important signals and levels that the market is going to respect. So if you just look at what we're seeing on the chart right now, this is my 60-minute chart marked up with all my bullish and bearish signals. You can see off the highs and the lows here. And then I've got my market structure or scaffolding that's drawn on the chart as white lines here. And then you'll see there's a couple other things. Now, we also, as you can see here, we consider Fibonacci, and you can see over and over again, when the market comes down into a fib leg, it'll typically hold that area and rotate right off of it. We just got that a couple days ago back, I think on August 4th or 5th there, where the market came right into the 61.8 retrace. It was also a very strong, and let me bring this back here, excuse me. It was also a very strong area of previous resistance in the market. So if we go back, if you guys remember the week of July 4th, we were coming up into, and we had this scaffolding level on our charts here, 44.92.5, and for the entire week of July 4th, the market literally tested it to the tick, peaked through a couple ticks here and there, and then finally pulled back, held it, and then we went ahead and started to sell off from there. And that was a major support and resistance area. There's a reason that we have these market scaffolding levels on the chart. And by the way, this was on the chart before we ever came up here for that week of July 4th. We had previous strong resistance. We had a very strong, if I can go back here, very strong Fibonacci leg right there. And sure enough, that's nearly exactly where the market got its rotation to come back up. So we're coming in here and we're looking at all these different relevant Fibonacci legs and our market scaffolding. So what I do here is I'm considering what is the major Fibonacci leg that we're currently trading within. And what we have so far, like if we were coming into the beginning of this new week, which will be in a day or two here, going into the second or third week of August, we want to consider where was the market at its most extreme high and how far has it pulled back from there down to whatever most extreme low we're dealing with. And so I go through and I map out. So the high of the year up top here, this is the last major rotation we dealt with. And I just go ahead and draw my fib across, bring it right down to the most recent swing low, and that starts to give me the 3 major Fibonacci legs up above us that could act as resistance for the bulls if they start to push higher. And we had those on the chart a couple days ago, and actually it was just a day or two ago, we came right into that first 38% retracement. In fact, it actually pushed right to our scaffolding level and the retracement there was shaded that morning as an expected resistance zone. We got a nice pullback from it and then popped through by about 2 or 3 points, and then went ahead and sold off into the end of the week from this previous week that just ended, right? So we get these levels on there because all the time, I mean, here's just a couple days earlier from, I believe, the end of last week, right, or 2 weeks ago now, right into that retracement area, right into a major swing area. We peak through and then go ahead and sell off for, you know, whatever that was, 50, 60, maybe 70 points lower. So this is why we have these on the chart. They just seem to work over and over again. And so that's what we have on the chart coming into this week now. We've got our 3 38.2, 50%, and 61.8 retracement levels up above us, hinting at potential areas of contention for the bulls if they get up there. So that's how I get the fib to the downside here. So if the bulls push higher, I've got 3 key levels above that typically act as strong resistance. And a smaller time frame here, looking at the most recent swing high to swing low from basically, I think this was Thursday's high all the way down to the low we made on Friday. We've also kind of got this smaller leg that we're currently trading within. And interestingly enough, on Friday, we came to the tick, right to the 38% retracement there, and got a pullback here and then chopped around for the rest of the day here. If you guys remember yesterday, Friday of last week, it was a total chop fest, but we did hold just after the open there, right at the 38 retracement, nearly to the tick, and then pop lower. And as you can see, we actually came on the high there of the regular trading hour session on Friday was one of our market scaffolding levels, right? And that's that 44.92 half that seems to just work over and over again for major rotations. So some beautiful confluence there with that smaller retracement. And then again, we have the bigger picture retracement up above if the market does start to trend higher here and get outside of this smaller leg. So that's the Fibonacci legs. Might have spent a little bit too much time on there. And then we map out, and I've already kind of mentioned these white dashed lines we have coming across the screen, but these are our price structures or our market scaffolding. And these levels, if you zoom out and look, these areas in the chart are where we get major rotations. Does it work every time the market tests the level? No, it's not like every time we come to one, we get a major rotation, but we see it happen over and over again off of these areas. And the reason why they work is because these are the areas in the chart where the market over historical data, over the course, if we zoom out to maybe, let's go to the 4 hour here, over the course of multiple months and multiple years, we've seen the market rotate off of these areas over and over again. And we've got some of the largest rotations right off of these levels. And believe it or not, if you go through and start to map out these levels, and I don't have time today to show you how you would map them out, but if you map them out and then you move into the future here, and as the market's developing in real time, we see the market hold these levels to the tick in many instances for major rotations. We even are able to use it on a very short time frame chart. In fact, I don't think I can pull it up right now, but down on the 1 minute chart, a 512 tick chart, you see the market respecting these areas day in, day out. You just have to ask some of the members of the trade room. It's almost unbelievable. Every day I'm blown away by how often we hold these market scaffolding levels for really, really strong retracements, or really, really strong moves, I should say. So getting these price structures on here, getting the outline of the major, if you just zoom out and look, a lot of the consolidation and stuff will happen right inside of these scaffolding areas. So you want to get those structures in the market up on your chart. And then once you have those up, like I said, any type of major naked swings, and a naked swing would be something just like this. And again, I don't have to kind of bring you guys a picture of a perfect setup to prove my point. I'm just showing you exactly what's happened here over the last few days and few weeks. So the last major naked swing was right here. So as the market was selling off, just a couple weeks ago, back at the beginning of August, we broke down through this major rotation down here, right? We got the sell-off from the high of the year. The market pulled back. We rotated, and interestingly enough, on that day in our trade room, we mapped everything out, and we mapped out this little pocket right here from about 45.50, 375 to 45.55 quarter. Where did the market rotate? To the tick off the low end of that expected support zone. But anyway, that is a digression. So that was the last major swing. If you were to zoom out and look at this again on a 60-minute chart, as the market was breaking lower and getting outside of that previous major swing, it went ahead and broke lower, and we mapped that out on our charts as an important level. It was basically the low of the previous weekly price action there. So going into that next week, what do you know? The market pops up, comes right to that last major naked swing. We had a retracement level just a tick or two above, and what do you know? They test into it, and then from there get this major rejection down to rotate back off our next expected support zone. Here you can see it was shaded on that day right into it, and there's that 61.8 retrace. The market peaks through it, and then we get this huge pop back up, only to fail, interestingly enough, right at our market scaffolding level. All right, so getting those major swings on, those are areas where you're typically going to see some type of reaction. And on a zoomed out 60-minute chart, you might not see some of the detail, but on a short time frame, you typically see these levels hold for little micro pullbacks, little 2, 3, 5 point nice scalp opportunities. And it just seems to work again over and over again. So we'll go in and we'll get those major swings mapped out on the chart. We've got the lows. If you're coming into, let's say you're pushing lower and you've got some type of naked major swing from the upside, like back here, that also is important. However, for us, we had a market scaffolding level sitting there. So I don't necessarily have to draw a dotted line across there because I've already got my scaffolding outlining that, hey, when we get down to that level, that could potentially be a strong support or resistance. All right, so once we get those swings mapped out, once we get the price structures and the scaffolding all on the chart, and by the way, these market scaffolding levels are now here until the end of this contract. So when this futures contract expires here in September, we'll have to come back and redraw the larger market scaffolding levels on the chart for that new contract. But for now, we've got these scaffolding levels, and they're not going to change or shift for the next, we've got about another month and a half here before the rollover occurs. And these will continue to be relevant until the futures contract rolls over. We also get a lot of beautiful confluence between some of our swings. As you can see here, the dotted line shaded in there right by our scaffolding level. These are swings lining up with, again, scaffolding. You know, when these alignments occur, those are typically where we have those big turns. And by the way, on Friday, if you guys if you want to see a beautiful example, I should say, on Friday, after we failed right around our scaffolding up here on Thursday, the low of the day on Friday was our scaffolding level to the tick. The high of the regular trading hours on Friday was our market scaffolding level nearly to the tick. And it literally, we see this stuff over and over again, like a stair step coming down. Then we even hold the back end of this scaffolding area nearly to the tick and come down, bounce off the next scaffolding, come up and resist off the next one up top again. And so we see when the market's failing and coming down into these new scaffolding areas, that's why we're expecting these to potentially be potential support zones down here, okay? And then we also can use these as great parries for holds lower. If it's a really strong bearish market, holding the back end of our scaffolding levels is typically a great opportunity for a trade. We see it kind of happen stair-step wise, where the market will hold, and here was nearly a whole week where we were holding scaffolding, came down, bounced up to the next scaffolding, came down, then got below this one and held it and held it and held it and held it. Of course, they don't make it easy. The market is not easy. They pop through a bit, come down, and then hold it nearly to the tick, and then hold it to the tick here. And then we just went through over here where the market held this, came down, and then on Friday, held the market scaffolding level to the tick here for the high of the day, right? And then we bounced again, parrying right off the next scaffolding level below. So that's why we have these on the chart. They are extremely powerful. And again, we could even go to a 512 tick chart and see this holding to the tick inside of a lot of these, more zoomed out 60-minute candles. Okay, so the last thing that I haven't mentioned in terms of levels, we've talked about looking at the larger Fibonacci leg that we're trading inside of. We've looked at the scaffolding levels, and we talked about looking for these naked swings, kind of like this one that was very relevant just within the last week, week and a half. The next and the final really set of levels that we use in terms of strong support and resistance, and also as using it for a bias, we look at the high of the day before, the low of the day before, the 50% of that range, and then we look at the extended trading hours close, which is this dotted white line, very small dotted white line, and then one proprietary level out of everything we look at. Really, the only thing proprietary is this orange line that you see on the chart. It works so incredibly well. In fact, on Friday, we came to it to the tick and got a very major rotation on the intraday timeframes. This level, in fact, even pre-market as well, we came right to it. We failed, we popped through it, and then later in the afternoon, came right to it to the tick and failed again. This level is based on overnight price action. So it calculates once the overnight session is coming to an end, it calculates on the charts, and that is a 6 a.m. Eastern. So at 6 a.m. Eastern, this comes up on the chart, this orange line, and that would be 3 a.m. Pacific, right? So at 3 a.m. Pacific, for me, I'm in Las Vegas, out on the West Coast here. That's when that prints, and then throughout the rest of the trading day, it becomes a very strong level for major rotations. And a lot of times, and again, I didn't have to find a perfect day. It was literally yesterday, right to the tick off of it in the pre-market, and then a couple hours into the open. So we've got that level. Again, it's proprietary. It's calculated off of the overnight price action, and every day it's in a different area. Okay, so again, beautiful hold. Sometimes it's not the best on some days. Other days you're going to be blown away by how well it works. So again, outside of the structure zones, outside of the Fibonacci's and some of the major swings that we're dealing with, we then want to be aware of where are we in relation to the low of the day before, the high of the day before, 50% of that range, which is very, very important. In fact, a lot of times this becomes a beautiful low risk trade opportunity right off that level. And then again, the close of the extended trading hours and our proprietary, what I call holy orange power level, because of how unbelievably well it works day in, day out. And once we start to get all of these levels on the chart, now we start to have basically our roadmap, right? There's a reason I call it the S&P roadmap, and that is because, and I'm going to go ahead and actually bring up my 512 tick chart and see if I can end this slideshow for a second and go to our 512 tick. This is really showing you this small iota of what's going on in the market. And I want to show you here. So here is the orange power level holding to the tick. And here is, let me see, I was about to bring up, it might not be, yeah. So let's look at this. So even on a choppy day, such as Friday, these levels that we have become the roadmap for where price comes and goes to. So again, this is Friday's price action, a total chop fest. And despite that, the market, almost like bumpers at the bowling alley, literally just kind of bounced back and forth between all the levels that we watch on the chart, right? And on our shortest time frame chart, we have three moving averages really the 200, the 34, and the VWAP here. These are our backbone for where we would expect the market to rotate for the bulls and the bears. Okay, so again, on a sideways day where the market's chopping around, the low of the day, scaffolding level, high of the day, scaffolding level, pullbacks right into our moving average and nearly to the tick, right? Holds off our VWAP, holds off the holy orange power level. And again, it was a messy day, so it wasn't like the most beautiful holds at these levels, but you can see over and over again that the market holds and respects these areas. Here is 50% of the day before in our holy orange power level, holding here for a pretty significant rotation back on Thursday of last week, only to reject right at our scaffolding level and VWAP, right? So that's why I call this my S&P roadmap. We see it bounce back and forth from each level, and it's not always going to be a perfect straight line, but you just see this happen over and over again, holding, getting through scaffolding, pulling back to it, bouncing up to the next scaffolding, rejecting off of it, coming down lower, bouncing off the next scaffolding, holding VWAP. It's like the perfect roadmap that you would ever need to trade the futures market, if you ask me. So with all that being said, what I'd like to do now is actually go ahead and look at the higher time frames and see what they're saying coming into Monday's market. Now, I do have to kind of qualify that with saying that, look, we have Globex on Sunday night that could completely change the picture. So I'm going to share with you what we're seeing here coming into Monday morning. But remember that on Monday morning, we're going to have a couple hours of price action that are going to influence what our pre-market analysis is going to be on Monday morning. So we're going to analyze this as if it was Monday morning, but you do need to keep in mind that Globex could completely change the picture on us, okay? So outside of going ahead and marking major news events, in fact, I could probably pretend and mock and put something up there on Monday. There doesn't happen to be anything super strong on the news calendar here that I would actually mark. So I guess we won't actually go ahead and do that. So outside of the news, now what we want to do is go ahead and go up and look at that weekly chart, okay? So the previous weekly candle here looking pretty bearish, somewhat of a doji, right? And 50% of the weekly candle happens to be 45.02. So going into Monday morning, that will be a level that you're going to want to have on your charts up there. That's going to be an important level for bias coming into next week. So if the market can get through 50% of the previous weekly candle, it becomes a much stronger conviction for a retest of the yearly high, right? So these are just some more zoomed out things before we jump down to the hourly and 4-hour charts for a little bit more of a specific plan. But looking at our weekly chart here, we have a very bearish looking pattern. The only thing that would negate that potential bearish push here is we're getting our first weekly bullish potential signal from the low of last week. And what I told my traders last week is we have a little bit of cushion down here. That means that if the market can push lower coming into next week, if it stays above the previous swing here that we're seeing on our indicator down here, we will still have a potential bullish divergence. So there's a little bit of room from the current lows, but we're starting to get really the first signal that we've had on the weekly chart for, you know, probably 2 or 3 months now. And that is a very important thing that you want to be aware of. And why is that? Well, because when we get weekly signals, they lead to 2, 3, 4, 5, sometimes 1,000-point moves. And we're talking here about the ES or the S&P. So when we get these daily or these weekly signals can follow through for really incredible moves. So coming, and this is divergence now. So remember that Marina was talking about this earlier. That's what I look for. I look for these divergent setups on these higher time frames. And when everything comes into alignment, like I said at the beginning of the presentation, that's typically where we get some of the biggest pushes. So we're not this is not a guarantee because this next candlestick hasn't opened. We haven't gotten confirmation, and I don't have time to go through all the information in terms of confirmation and how to read the signals. But again, if the market doesn't break 44.11 quarter, the low from a couple weeks ago, we will have a very clear weekly bullish divergence, which could lead to some type of major push higher, or at least an attempt to come up and test the high of the year. Okay, on the daily, we actually also have agreement with the weekly. So on the daily, back on Thursday, we had agreement there that told us a bounce to push higher made a lot of sense. But we also have it from the Friday low as the market kind of inches lower here on this pullback, right? So the last signal that we had on the chart on the daily was a bearish signal from the high of the year. Ever since that signal had formed, we've now pulled back, let's say almost 200 points from that area, okay? Or maybe a little bit more than 200 points. And just before that, if you guys were in our live trade room, we talked about the bullish signal back on July 10th that led to now, what is this? About, again, almost a 200 or more than a 200 point push higher. So when this daily chart starts to show us potential bullish signals, we better pay attention and heed those potential signals, because when they follow through, you've got beautiful swing opportunities. You've got beautiful bias in terms of the short time frames for the bulls, and these are things you want to be aware of. So now that I know that my weekly and my daily are showing this potential, again, it's not confirmed until we can break the top of the signal candle. Until that happens, but we have the potential. So we want to be aware of the daily and the weekly, and then we want to see, does the 4-hour chart also agree with that signal from that very low that we were looking at on those two other time frames? And sure enough, we also have the 4-hour agreeing with a bullish signal from Friday's low, and our hourly as well from that low. So with everything lining up, we've got a lot of clues that this might be the beginning of a potential rotation and a bullish push. Now, again, like I said before, this doesn't guarantee a push. It just tells us that there is potential on the charts now for that larger rotation to start to begin. And that's why we have conditions. So what do we want to see here in terms of that potential bullish bias to start to occur? Getting through 50% of the day before or the week before, and getting through 50% of the previous day would be our first two conditions to start to get some more confidence in that potential rotation, right? So what we're doing is we're anticipating market rotations as they're about to occur or just before they're about to occur. And like I said, on Friday, or on the high of the year, which was back a couple weeks ago, we had everything aligning up here for the bears. And then ever since that day, we've got this, almost 200 point pullback. And then a couple weeks earlier, we had everything lining up over here on July 10th going into July 11th for a potential strong bullish rotation back higher after the pullback. And by the way, on the week of July 4th, we had a very strong multiple time frame, higher time frame bearish signal. And remember that we saw our scaffolding coming across here for the week of July 4th, and it kept hitting and hitting and hitting, and then we pulled back. We anticipated that pullback all the way back on Monday, or we weren't really trading Monday of that week of July 4th, but on going into the first day we started trading after July 4th. So going into the 5th, we had a strong bearish signal, and sure enough, the market made a pretty strong pullback. And then July 10th, we got a really strong rotation back up. So you can see that once you start putting the signals on these 4 higher time frames, hourly, 4-hour, daily, and weekly, we start to get the areas in the chart that are typically going to be where we get the biggest rotations. And then we're using that on shorter time frames to go ahead and set us up for certain trade setups. Now, I'm running out of time, and I'm usually a very verbose person when I'm explaining this stuff. I go on my rotomontandes, and I kind of lose track of time. So I've only got 3 minutes left, and there's a lot of information So what I want to do is actually just share with you guys, you know, information about our community, so that if you're intrigued by what you've seen, maybe you'll come and at least check out the website, see what we have. So let me bring up this slideshow here. So again, there was a lot of information. There's a lot of different concepts that I just don't have the time in a short presentation to go into and teach you how to read and how to get this stuff. But if you're interested, go to the website, www.sproadmap.com. I've got all the information there. We've got daily reviews on our YouTube channel, which will be linked on the website, where you can see how this stuff works every single morning. I do a live recording of what happened the day before, so that you can see all the levels and the signals carrying through and working day in, day out. There's no secrets here, and we're not using any type of secret indicators or anything like that. It's all pretty straightforward. It's just learning that methodology and keeping that strict methodology every single morning, so that you can start to get a consistent process in your trading. So in addition to the morning broadcast that we have, and give me 1 second, I don't know what that alert just was, but in addition to our morning broadcast, we also meet once a week for a weekly webinar. So it's your opportunity in that weekly webinar to have direct question and answer, almost like a one-on-one coaching session if you want. We review trading setups, we talk about trading strategy, trading psychology, all that type of stuff. And so this is trying to help support you as a futures trader in becoming a more consistent trader. We also stream the live chart. So once we do our pre-market presentation and we map out the charts to give you the best levels and signals for the day, we then stream the live charts that do show divergent signals. So if you remember on the 512 chart, you will be seeing the 512 chart trading live. You'll be seeing signals plotting on the RVI down below here for potential rotations. And so you'll get that every single day if you join the service. And I think that's basically it. We do have the blog and the daily review pages on the website, so you can go ahead and take a look at how this stuff works every single day. Again, I don't like to be secret or keep anything secret from you, so it's all there for you to see and review and consider whether or not this might be something that will help bolster your current trading right now. And then we have our YouTube channel, which again is linked somewhere on the website as well. So you can take a look at our live recordings of the review from every day. So that's basically it. I'm not big on the selling. I'm just an intraday trader who trades every single day, or at least every day that I have things lining up that I like. And I offer this service for anyone who wants to jump on board with this proven strategy and a way of mapping and reading the market. So that's basically it for me. I don't know if there are any questions or there's time to answer any questions right now.
Justin, I'd hate to cut you short because I can't tell you how impressed I am with the presentation and how accurate things were. But if you would like, I provided a link to the audience in the chat, and if you would like to give them your email to direct questions to, that would be fine. But in the interest of being fair to everyone, I do have to ask you to, close it up.
Perfect. Thank you so much. My email will be on the website as well. Have a great day, guys, and enjoy the rest of the webinar event. Thanks again.
Thank you, Justin. The S&P roadmap looks amazing. Thank you for the great presentation. You did a wonderful job for your first time. And just trading the E-mini and S&P futures and making our audience such a generous offer. Ladies and gentlemen, if you want to find the most important support and resistance levels and learn how to find trade setups with limited risk but very high potential returns on the E-mini S&P futures, then Mr. Justin Givler of the S&P Roadmap has a solution for you. Again, I've put his link in the chat box. You can always find him at www.sproadmap.com. Justin, thanks again for joining us today. Have a great weekend, and we do hope you come back.
Thank you. Would love to.
We are going to keep it moving right along to our next presenter, who has over 30 years experience in the markets and trading stocks, options, futures, and Forex. His website offers a full 6-month training package that has taught thousands of people how to trade the markets. Chris has run a NASDAQ trading desk and consulted with multiple online brokerage firms since 2000. Here to present using pressure thresholds to trade futures is Mr. Chris Mercer of TradeSight.com. Welcome to Trader's Corner, Chris.
Thank you, Rob.
Very
How's
welcome.
everybody doing? Good. Everybody's doing good today, I hope. And is my sound clear? Let's do a sound check real quick.
Sound check's good. I can see everything on your presentation. You might want to switch it to presentation view.
I'm just worried what that's going to do here. Let me give it a whirl. Does that work?
Wonderful.
All right, folks. My name is Chris Mercer. As Rob said, I am the president and founder of TradeSight.com. We have been around since 2001, educating people on the markets. Today, we're going to talk about our pressure thresholds, but to give you just an overview, we do stocks, futures, options, and Forex. We do use NinjaTrader primarily as our trading platform. We've been training people on the markets for over 20 years now. So we going to discuss the math, the theory, and the use of a tool that we call the pressure thresholds. And to give you the math, I know sometimes people like to, educators like to show you a tool but not tell you what the math behind the tool is. We will give you the math today. Obviously, we do have a tool for it in NinjaTrader itself. And then let's take some questions along the way if you have any, or we can save them till the end. Totally up to you guys. As I said, my name is Chris Mercer. I'm the president and founder. Rich Derrick is my head equity analyst. He's been with me since 2004. He's got a very robust history of trading the markets and a different set of skills than I do a little bit, but we kind of put it all together for our users. Our methodology, the most potent indicators and tools will work equally well across multiple asset classes, and where appropriate, the above is true for multiple time frames. In other words, something shouldn't just work on one time frame. Some shouldn't just work on the futures, but not on stocks, right? It should work on anything if it's a technical indicator. And that's our general methodology, is that if we find something that works, we want to try it out in other asset classes. If we find something that works on a 10-minute time frame, we want to try it out on a 30-minute time frame. And usually you will find that the true indicators that are valuable work on multiple time frames. And a lot of times, if you put those time frames together, you'll find out where the more potent entry points are in the market. Having indicators or tools that work across multiple asset classes and multiple time frames simplifies one's trading approach. In other words, you don't want to have to go, okay, well, let's look at this on the 30-minute chart. I've got this signal. Now let's go see what it looks like, a different signal on the 5-minute chart, because I don't think they work on the same time frames. It's a lot easier to get used to tools that you can apply to whatever you're looking at on whatever time frame. The same is true for increasing one's competency and level of confidence in the market. Obviously, it's a lot easier to focus on things that you see working over and over and over again, rather than trying to figure out what works on what time frame. If a study only works for one asset class, does it really work? We don't think so. My opinion is, if it's going to work on stocks, it should work on futures. If it's going to work on futures, it should work on Forex. You just have to know how to apply it. So we do prefer the keep it simple approach to the markets. You know what I think here real quick? No, we're good. Okay. Okay, the pressure threshold theory. The purpose of a pressure threshold is to have an objective expectation of the range of that day's price should trade within. Okay, so in other words, we're going to come into the day and we're going to say, objectively, based on what's been going on, not just yesterday, but in the recent future, the recent past, sorry, my bad. What's been going on in this stock, and what does that imply about where this stock should trade today, barring anything that might get it outside of that range, and we're going to show you the uses of that. There's multiple uses of the pressure thresholds. They're calculated from very near-term price action and are available before the market opens. So in other words, I know going into the day what the pressure thresholds are for every stock symbol, every future symbol that I want to follow, every Forex pair if I want to. Think of the pressure thresholds like a 2-day pivot series. that is more directionally influenced than the standard pivot series. So if you're used to a pivot series, right, high plus low plus close divided by 3, that's your pivot. That's from the prior day's action. You take the high of the prior day, you add the low of the prior day, you add the close of the prior day, you divide that by 3, and that's today's new pivot, right? It's just based on what happened yesterday. Whereas the pressure thresholds are going to look back a couple of days, and they're going to give us a little more bias as to what's been going on in the market, what type of ranges we've had, what the direction has been, and then they're going to come up with an answer. So to give us just a couple examples before I get into the math, just to show you, this is Tesla on a 5-minute chart one day. The red line is what we call the upper pressure threshold. The green line is what we call the lower pressure threshold. And you can see coming into the day, we had a small gap down, and then look what happened. We head down, we bounce right off of the pressure threshold, come back up, and we're flat. So we spent the day between the two pressure thresholds. We used one of them as support, right? And that's what the use of this is to begin with, is to establish what should be, barring anything else happening, barring major moves in the market, where should the range of the day be? And then we have to apply what's going on in the market that day. Is there news on the stock? Is there something bigger happening in the market itself that might expect us to have this price action go beyond the pressure thresholds? Another quick example, this is Robinhood on a given day. And again, come into the day with the upper and the lower, the red line and the green line. You can see it kind of gap down just a little bit. We use the green line as support. We kind of come near it again. No problem. Stay within that range, head up. And then as we get up, where do we kind of top out? We top out within a couple pennies of the red upper pressure threshold, and then come back down towards the lower pressure threshold again for late in the day. So again, it's establishing in advance what should be, barring anything exciting happening, the range of the day. I'll give you one more, and then we'll start getting into the uses and the math behind this. So the next one would be, this is NVIDIA. And again, you can see small gap down, heads lower, can't break the lower pressure threshold. That's it, that's support. That's established support for the day. So then the range stays within that. Pressure thresholds work across all asset classes. Like I said, that's important, right? So we use them frequently on the equity futures, commodity futures. We use them on individual stocks. We can use them on ETFs. We can use them on Forex pairs. Options would be a little different, obviously, because options aren't really chartable like this, but everything else that would be chartable, you can basically use the pressure thresholds. Let's jump, jump right into the math. Okay, so this is how we establish what the pressure thresholds are. If the current price bar's close is greater than the current price bar's open, meaning when I say current, market closes on a Wednesday. Okay, so that's the current price bar. So then we're going to start calculating the pressure thresholds for Thursday, right? So the current price bar is the Wednesday activity. If the current price bar's close is above the current price bar's open, in other words, if Wednesday was a positive from where the open to the close, then the math works like this. You take the current high times 2, and then you add the current low, you add the current close. That gives you X. You take X divided by 2 and subtract the current high, and that gives you the lower pressure threshold of the day. You take X divided by 2 and you subtract the current low, and that gives you the upper pressure threshold for the day, the next day. Okay, so in other words, in the example, Wednesday going into Thursday. If the current price bar's close is less than the current price bar's open, then you take the current high once, add the current low twice, and then add the current close. That's your X. And now you take the X divided by 2 minus the current high is the LPT, the lower pressure threshold. X divided by 2 minus the current low is the upper pressure threshold. And if the current, and this is obviously rare, but if the current price bar's close is exactly equal to the current price bar's open, meaning if the entire day was dead flat from the open to the close, then the current high plus the current low plus the current close twice, right? So that's the one we multiply by 2 in this formula, gives you X. And again, then you're going to take X divided by 2 and subtract the high. That gets you the lower pressure threshold. Subtracting the bigger number gets you the lower pressure threshold. And the X divided by 2 minus the low gets you the upper pressure threshold. So this is the math we use in determining the pressure thresholds. Now, how do we use the pressure thresholds? Like I said, it starts out, but it's the upper and lower resistance levels for the day. Those are the basic examples I already gave you, right? It's setting what should be the range of the day, right? That's kind of it. But these also can create breakout and breakdown levels. If they're established enough and then you break through them, you typically will get a move. They also establish what we call gap fill thresholds. And what that means is, well, we'll talk about that one in a minute, but we'll establish gap fill thresholds, which means when the market gaps significantly, there are implications to what the pressure thresholds are for based on where they lie, where the market gaps. So on a typical trading day, the pressure thresholds represent the band that price will trade within. The UPT and the LPT are important support and resistance levels for the session. Measured from the prior settlement, the UPT and LPT are almost never an equal distance from settlement. They are directionally biased from the prior day's near-term price action. So in other words, it's not like you're just going to get, oh, the upper pressure threshold is, 30 cents above yesterday's close and the lower pressure threshold is 30 cents below yesterday's close. That's not how that works. They're going to be skewed a little bit based on the price action, and that's the way you want it to be. The above is a key distinction, again, from a standard pivot series where the levels are equally spaced and not directionally biased, and they're based just on the prior day's action. All right, so let's look at this, right? So we talk about the gaps. Here's one where the symbol here is snow, right? And you had your trading going along the prior day, and then you gap down. So we've exceeded the lower pressure threshold, meaning we've gapped past it for the session, right? Now, what happens when we do that? Well, it makes it, obviously, gaps do tend to fill the same day. There's a heavy percentage of that. But in this particular case, the pressure threshold now becomes resistance, okay, because you've gapped beyond it. And as you can see, what happens here instead is, as we move back up, we run into the lower pressure threshold, the green line, and that's it. We stall out right there, can't get through. And we'll talk a little bit more about the gap piece in a minute. But it's an example of when you do gap beyond the pressure threshold, it becomes harder to break back into where that expected range was supposed to be for the day, literally sometimes to the penny, okay? Here's Uber. Now, here's the different one. Here's your different example, right? We break and gap below, we come back up to the pressure threshold, but we immediately break right through it, right? We immediately break right through that pressure threshold. So we didn't stall out there. There was no sign of a rollover. We broke right into that area. And so now what happens? Now the gap fill itself becomes more likely, meaning getting back to yesterday's close. We did that a little while later, took about 2 hours. And then we're back into that range, the expected range, which in this case, look what happens. We get up near point B on the chart, we run right into that upper pressure threshold and stall out, right? So now we've set the upper pressure threshold. So whatever caused this gap, whether it was the market, whether it was news on the stock, doesn't really matter. From a technical perspective, this stock exceeded the pressure threshold, but then shrugged it off, came back into that. Once it does that, the gap fill becomes more likely. The range of the day is established. We pause and stall out for an hour or so up at the upper pressure threshold. So we've established that level as resistance, right? And then we do break out close above that level. And what happens eventually from that? We run again, okay? So very important to see how these pressure thresholds get used. One other example, and then we'll get into some of these real specifics about it. The reason the market cares about the pressure thresholds, this is a good example of it, okay? This is the ES on a day. This is just ES market trading hours. We don't do the 24-hour cycle. And in this particular case, you can see the pressure threshold. Now, my point is this. We gap up, obviously. Why is the biggest candle of the day at point A, right? And it's because the market recognizes the importance of that pressure threshold level. And once it breaks back into it, everybody knows, oh, we're heading back for that gap fill at least, right? So breaking under that pressure threshold, that upper pressure threshold, is a big sign for the market that we're actually reestablishing back into the range of the day. And so everybody piles on that move. And that gives you the biggest moving candle of the entire day. I mean, the widest range candle is clearly that move breaking through the pressure threshold. So the market definitely knows, where these levels are. All right, let's talk about a couple of different uses of the pressure threshold. So first of all, breakout and breakdown levels. That's pretty simple. When price crosses a pressure threshold level, it is a strong indication that one side, either the bulls or the bears, has overwhelmed the other. This is atypical and also a trading opportunity. When a pressure threshold level is set and then broken, we have a potential trading opportunity. What does it mean set? It means that the market actually comes and touches and establishes that level as support or resistance. So we know coming into the day where the two levels are going to be, right? And then the market establishes that by touching it. And you can see in this particular case, right, we're going to go through and we're going to touch it here, we're going to touch it here, we're going to almost touch it here basically. Okay, we've established this, knowing coming into the day that this level was already here. We've established the level. The market's saying, yep, you're right, this is support. So what happens over here in the afternoon? Remember, the last hour or so is where a lot of the institutional traders and the fund adjustments come in, right? So over here, we finally break the level and it gives you a short trading opportunity, correct? Not a lot of time here left at the end of the day, but still, because this level was established, breaking it is actually significant and we pick up a little bit of speed on that move down. So finding these levels as support and resistance points once the market establishes them often can give you trade setups. It's a lot harder sometimes to go, okay, sure, I think it's going to hold the level, so it's going to bounce. I'm going to go long. You don't know how far it's going to bounce back. Maybe it's going to fill the gap up here. Maybe it's not. Right? I mean, it's an unknown, but at the same time, establishing this and then breaking it is usually a much more high probability trade setup. 80% of price gaps fill the same day. So let's go into these gap conversations, right? 80% of price gaps fill the same day. That's just a statistic. Okay, the larger the gap, the greater the chance of remaining open for the day. By the way, 95% of price gaps fill within a week, but 80% of them fill the same day. Pressure thresholds are also what we call gap fill thresholds, and they will objectively quantify if a gap is large enough to remain open for the day. So if a price gap exceeds the pressure threshold and remains outside for 5 minutes, it makes it more likely that the gap will not fill that day. And if a price gap exceeds the pressure threshold, whether it's a gap up above the upper or a gap down below the lower, and remains outside of it for 15 minutes, that makes it even more likely that the gap will not fill that day. This helps us quantify when to expect a gap and go session versus a gap fill session, okay? So let's take a couple of examples. Here's one. This is the ES, again. Small gap down. We opened between the pressure thresholds. Here's the lower one down here, the green line. Here's the upper one up here, right? So we did not exceed. We did not gap past either pressure threshold, which means that 80% that gaps fill the same day rule applies here. Right? We're in the 80% likelihood because we didn't have that type of energy, that type of a gap. And so now what you see is we move up, we don't quite fill the gap initially, but we do fill it here. We go up all the way to the upper pressure threshold later on in the day, pretty late in the day at that point. Remember, this is the extra 15 minutes after the close. But again, because we did not exceed a pressure threshold, we had a mentality that there was an 80% chance that the gap would fill. Now, here's this example. This is, again, the ES, different day, bigger gap down, right? 80% chance the gap's going to fill? No, not today, because it doesn't fall into that category, because we've exceeded, I mean, here's the upper pressure threshold way up here, but here's the lower pressure threshold, right? And because we've exceeded that pressure threshold in the gap, it makes it very unlikely that we're going to come back and fill the gap at this point. So you don't have to worry about trying to figure out an entry for a gap fill play when you've exceeded the pressure threshold. And this is a pretty big gap, but I'm going to show you some examples where other ways where you gap closer to, beyond but closer to the pressure threshold. But again, you'll find that when stocks or futures or anything gap beyond the pressure thresholds, it gets a lot harder to fill those gaps. When you stay inside of them, if there's a gap but you stay between them, that makes it in that 80% gap fills. So if you can find good setups and any other signals that indicate a move back towards that gap, you've usually got a pretty good crack at it. When pressure thresholds line up with other indicators, they have even more effectiveness, okay? We refer to this occurrence as a double level. So in other words, we don't just use pressure thresholds. We have all sorts of tools we teach people. We've got a 6-month training program. It's kind of, you do it on your own pace, but then we sit down with you once a week and we do mentoring sessions and we walk you through. And every week, if you stay on track, we basically give you a new tool or a new piece of the puzzle, okay? So the pressure thresholds are one piece of that puzzle kind of in the middle of the training program. We worry about chart patterns. We worry about a lot of other signals. We've got other tools. We work you through all of it. But what you'll find is when you get multiple levels that line up together, it has a lot more effectiveness because you've got not just one idea of what's going on, but 2 or 3 or 4. And the more components that go together to make a double level or a triple level, something even stronger, the more likely it is that a trade will work. The pivot series, value areas, and other indicators will be even stronger levels when they align with the pressure threshold. So here's an example. Now I'm throwing a bunch of stuff on one chart for you, but to make it simple, here's your, in this case, the green line up here. You can barely see it, but it's, well, you can see it, but it's a light green line. This is the pressure threshold. The light blue line is what we call the value area high, and the shaded area, the gray shaded area in here, is the actual value area for the day. And in this particular case, what happens is we gap down. Here's the lower pressure threshold, way down here in this case. We gap down, we head up, we run into the double wall of the value area high and the upper pressure threshold. Having those two so close together makes it very, very difficult to get through. By the way, one of the other trades we teach is a value area play. And what that is if you gap outside of this shaded area and then you come up and establish that area, which we do right here, we hit it exactly, and then pull back a little bit. Now, 80% of the time, if you break into that value area, you're going to basically cross the value area, cross the shaded area. So in this particular case, we had a high probability trade entering the value area here, and then we could tell we were going to top out, not just right at the value area high, but we had the pressure threshold right here. And with the two of them together, it becomes very unlikely, or a little bit harder, obviously, to keep going. So that gives you the top, right? And then you can see on the pullback, we test the value area low, and now eventually we break out of that. But the real trade for the day was there, and the way to know that the top was probably in, and maybe a reversal point, is the pressure threshold combined with the value area high. We have tons of other tools, but again, I want to show you one here. And then I'm going to actually show you some live charts from Friday. We're just going to go through some stuff from Friday on Ninja and walk you through some actual pressure threshold trades just from Friday by itself and just see how they work. So here is, we have a signal. This one's complicated. This takes weeks to train people on this one, but what you'll see is these numeric counts here, these numbers above the candles. And in this case, the light blue count is the one that matters. When you get to 13, the way this math works, you get a reversal signal, okay? And so what happens in this particular case is this is the QQQs. We gapped down, we held the pressure threshold, came up here, ran into the upper pressure threshold, back down, okay? Here we wiggled past a little bit. Then we come back up, but this 13 here, getting this 13, even though we ran out of time for the day, getting this 13 signal implies that the market should reverse. High probability chance it should reverse. The fact that it's lining that up with the pressure threshold is a very important combo indicator. And the fact that it did that, by the way, the next day we actually were down on the QQQs. And then one more kind of similar one, this is the 13. This is on Apple on the 5-minute chart. So again, you can see the blue, light blue numbers, and the 13 is the one that matters. That's the reversal signal, meaning in this case, a buy signal. We gap down for the day. We established, look at the pressure threshold is support, right? And then the pressure threshold is support. But in this case, not only was the pressure threshold support, but we got an actual buy signal 5 minutes earlier as we touched that level, okay? And so now we can buy Apple. And the nice thing is it's a low risk trade because you can put your stop not too far below. I wouldn't give it a ton of room if it and in this case, 80% chance we're going to hold the pressure threshold and 80% chance we're going to get an upward move because of the buy signal. Takes you down to not too big of a chance it won't work, but on the ones that don't, you're just going to have a stop not too far underneath this level here, because if you break it, you want to be out. But the ones that work as they should, this is how it goes, right? Curl back up and run 2 points on Apple into the end of the day. So again, that signal combined with the other one is what it is. Now I'm going to end the slideshow and take you to the live charts. If anybody has any questions real quick before we do this, and let me check my time too. We got time to do this. If anybody has any questions, obviously on any of this stuff, feel free to type them in the room, but let me get this out of the way so we can, there we go. Hang on. Okay, so we can look now. I think you should see, I assume you guys can see, is that true? You can see my big NinjaTrader chart here? I think that's true.
If you need confirmation, I give it.
Thank you. That works. Just don't want to keep going without having the right thing going. Okay, so this is Eli Lilly's 5-minute chart from Friday, and I want to show you this one because Friday was not a very interesting day. It's a summer Friday. I think the prior presenter was talking about kind of just a choppy blah day, and yet we're going to see examples here of different ways that the pressure thresholds were used on Friday, despite the fact that it wasn't really a very interesting session. So here we go on this one. We gap down. This is the this red line is the upper pressure threshold. I'm sorry, we didn't gap down. We opened flat from the prior day. Okay, and then this is the red line is the upper pressure threshold. You can see at the high of the opening candle in this particular case was the upper pressure threshold itself. We kind of pulled that back a little bit, pulled down, and as we turn up now, we break through. So it's a breakout point, right? We've established that point as resistance early, and then we start to curl up. And even though it was a flat day in the market, Eli Lilly, with everything going on there, breaks out. So that breakout point, when you get that close of that candle above the upper pressure threshold, gives you a buying opportunity that then runs all the way up to the 531 area. So you end up with like a 6-point run in Eli Lilly. Let's go through several stocks that popped up on Friday. So here's Costco. I'm not going to keep sliding this. So this is Costco. So you can see 5 days back, but let's just focus on the last day over here on the right. So you've got basically a flat opening on Costco. And as you can see, as would be expected, stayed within the range, came up very near the upper pressure threshold, right? But didn't break it. So again, this one says what? We established what was supposed to be the range for the day, and we in fact did stay inside that range. Let's take a look at Amazon, another one people love to trade, obviously. Again, flat opening on Friday. Again, upper pressure threshold, came close to it, but didn't get through. Lower pressure threshold, not even come into play. So again, established where the range was supposed to be, and in fact, that's where we sat. Let's take a look at Caterpillar, another big trader. Caterpillar opens flat, spikes up, runs into the upper pressure threshold, can't get through. Tries it again a little while later, right? Can't get through. Establishes that as the range of the day. That's the exact high that second time. The first time it kind of swept it, but did not close above it. So again, established that we would be under the upper pressure threshold most of the day. High probability chance of that. Never got near the lower pressure threshold to even play with it or try. Let's take a look at Google. Okay, now this was interesting because all the other ones, remember, this is still Friday, same day of the week. All the other ones were playing with the upper pressure thresholds. Google, on the other hand, gapped down a little bit and comes down and retests or tests the lower pressure threshold, which is the green line. Couldn't close below it, and the opening candle couldn't close below it when it tried it a few minutes later, and establishes that as support and stays in the range. So even though it was a flat day in the market and everything else was playing on the upper threshold side that we so far have looked at, Google played more on the lower threshold side, but still held the level, couldn't get through. Goldman Sachs, just dead in the middle, right? So you've got, look at this range, look at this, what's established, and you basically just stuck inside the range for the day, dead in the middle of that range. JP Morgan Chase, here you go, gap down a little. This one comes up and decides, okay, let's get a little bit stronger, so a little bit better than the Google, but where's the high of the day? Right, comes up close to it before lunch, up to near the upper pressure threshold, doesn't quite touch it, and then after lunch touches it, closes right at it. So again, can't get outside of that range as expected, right? We're supposed to be stuck inside that range. LRCX, another one. Now this one's different. This one gapped down, right? This one gapped down enough on Friday that it gapped beyond the lower pressure threshold. Okay, so with that gap, with gapping beyond the lower pressure threshold, right, it makes it what? Less likely that we're going to go back up and fill the gap, right? Certainly, I would expect that the green line, the lower pressure threshold, even if we got there, would have been resistance, but you don't even really make an effort, do you? Like, there's no point. Because you've gapped beyond that range, it's very unlikely that you're going to go back up and fill that gap, and it does not. Let's look at Lululemon, another one people love to trade. Yeah, so this one gaps down, heads right down, comes near the pressure threshold, can't quite break it, within a few cents of it comparatively on a $300 stock, and then gets stabbed. By the way, that blue, the purple line that you see there is the VWAP, gets glued to the VWAP for the rest of the day. This one's a little interesting. Lyft basically gaps down, comes within a few cents of the lower pressure threshold, and then heads up, fills the gap, goes higher. Remember, filling the gap more likely because 80% of the time because we did not exceed the pressure threshold. Heads up and then gets within a few cents of the upper pressure threshold, can't get through. So again, perfectly stays within the two boundaries and range for the day. Microchip, now this one's gaps down, never fills the gap, but again, look where it goes down to at the low of the day. So just like we see so many of them on Friday playing with that upper pressure threshold, this one plays with the lower pressure threshold, kind of has a weaker bias throughout the day. So no matter what direction, it's still playing with the pressure thresholds and staying in those ranges. Meta, okay, another great one here. Gaps down, goes down, tries to play with it. The lower pressure threshold bounces back up a little bit, tries it again, tries it again, tries it again. I mean, just never can really get through that pressure threshold area, can it? You know, basically establishes that as the range or staying in between that and the upper pressure threshold clearly. And we got a couple more here, and then we'll call it. I think it was Microsoft. That's boring because that's clearly within the range. Was it Roku? Roku also clearly within the range. Shopify, I believe. Here it is. So Shopify, this is the one. This one gaps down like that LRCX that I was talking to you about. Gaps down, tries to break back above the upper pressure threshold, but cannot. You know, can't get a close above it. Then pulls down a little bit lower, comes back up. Tries it again, hits it exactly, hits it again 10 minutes later exactly, tries to sweep it one more time, can't close above it, right? So again, when you gap beyond that pressure threshold becomes very specific resistance. You know, a lot of people make the mistake on a trade like this because they think, oh, we've gapped down, but it doesn't look like that big of a gap, does it? I mean, it's still inside of Thursday's range. It's still inside of the yesterday's range. By the way, look at Thursday on this stock. You see the 13 at the low, and then we rallied, and then you see the 13 at the next high, right? So in other words, we get the buy signal at the low of the day, we get the sell signal very late in the day, right at the high of that move. So now we gap down on Friday, we stay inside of Thursday's range. That's boring. That doesn't seem exciting. I mean, of course we can fill the gap. Why can't we fill the gap on a Friday when we haven't even gapped outside of yesterday's range? And the answer is because the pressure threshold says we gapped beyond it, and that really takes those odds down. So we don't get anywhere. So again, it's very important to focus on where you open in comparison to the pressure threshold levels. It answers a lot of questions if you're doing intraday trading, and then we go from there. I'm trying to figure out if there was snow kind of drifted right through it. Visa, let's look at Visa real quick. Oh, and let's look at UPS. Visa, nothing, stays totally within the two. UPS, this one gapped beyond and never came back. So, you know, this is examples of what are the pressure thresholds, how they can be used. It's a tool we've used for a long time, find it very useful in most of the markets. And, you know, again, I can show you Forex examples, futures examples. We've already got, if I tuck this one away real quick, let me put this chart down. You know, we would already know the pressure thresholds, for example, in the futures. So this is the ES, 5-minute chart of the ES, and these levels, all these lines that you see here on this, is a complicated series of lines that we use because in the futures we need a lot of tools. But these are the levels already for Monday. And in this case, the way we do it, you can see the notations on the far left side of the screen. There's a purple line, one purple line in there. It's called the UPT, and that's going to be for the ES on Monday. Will be the upper pressure threshold at 4506.50. So if we head up, that's where we would expect to find the resistance. And I'm guessing, because you can't see it here, but it's probably bunched in with a bunch of levels right at the value area low is going to be the lower pressure threshold for Friday. I'm sorry, for next Monday. So we already have the calculations set for next week or for next Monday. And each of the stocks also would have that with the tool that we do. So it gives us a lot of information to work off of. And the same is true of like the NQs. Does anybody have any questions? I went through a lot of stuff there, I know, and I'm always, you know, you're trying to target a 45-minute window. I think we've got like 6 minutes left. If anybody has any questions, I'm happy to answer them. Obviously, like I said, you can check out our website. I'll type it in here into the chat. And we do have a free trial to come into our lab where we walk you through the markets throughout the day. We do have a private Twitter feed where we make calls in stocks, futures, options, and Forex. We have a lot of tools for NinjaTrader. We do have some of the tools for other platforms as well, but Ninja is our focal point. And then we also have a training program. And like I said, the 6-month training will teach you stocks, futures, options, and Forex, all of it, and how to trade all of them. Like I said, anything that works should work on every asset class and on every time frame, right? So we teach you the tools first, and then we show you how we apply it to the various asset classes. But they should work equally for the most part. I mean, obviously options is kind of an offshoot, and we love trading options. It's lower risk stuff, but you don't necessarily apply something like a pressure threshold to an option because you're not looking at the options chart, you're looking at the chart of the stock itself, and then you're trading the option. But we teach you how to do all that, including multi-leg option strategies and how to trade the futures intraday and how the signals work in general. So if anybody has any questions, that's great. Otherwise, I'm gonna wrap it here. Maybe I'm 2 minutes early or so, and leave room for the next person.
I'm trying to give you a few extra seconds for the questions to come in. But Chris, I have to tell you, you've got me glued to my screen. I've been trading for quite a while. I haven't heard of pressure thresholds before, but being an options trader, I can see how knowing that level and buying a short-term expiration option could have some explosive 3 or even 4-digit gains.
Yep. Yeah. If you don't, if you're trading, especially when you're trading, what the $300 stocks and stuff like that, we had the examples with Meta and some of the other ones that, when you put those combined signals together, especially off of the pressure thresholds, and like you said, get a near expiration option, you can put a lot less money up and still make those, 2, 3, 4, 5 points in the intraday, and yeah, it works pretty well.
Right. With that said, there's a question of the cost for 6 months.
So okay, great. So so let me start with this. Our monthly subscription, which means you can come in, you get our calls, you get the lab, you get our tools if you want them, you get our futures and Forex levels, that type of stuff. You get access to listen to us all the time. That costs $169 a month. The majority of people don't just jump into that because they don't necessarily know everything we're talking about. I mean, they haven't been trained on all the tools. So the 6-month training program costs $4,500. It includes the 6 months of the subscription. So it includes the $169 a month for 6 months in that. The rest of it is our training time, us working with you. And like I said, the way it really works is you're going to get modules that you go through online. You view certain, 1 or 2 of the modules, then we sit down and I go through it and I kind of quiz you and make sure you got it, you grasp it, and then we sort of have you watch that particular thing in the market for the next week, and then we give you the next module or 2, and then you look at those, and then you sit down with me and we review them, and then when you get to a certain point in the program, what you do is you start trading, and we usually start with stocks. I mean, I know everybody has their own interests, but we do believe that the stock piece is the most important to start with. Futures and options comes after. Forex is kind of saved till last. There's a lot less interest in Forex anyways these days. And so what we do at a certain point is you trade small size under certain parameters that we set, and you then send us back an Excel, a blotter. We give you a blotter to fill out in Microsoft Excel or Google Sheet that you show your trade entries and your prices and everything that you did, and you send it over to me and I review it every weekend, and then we pick a time to talk during that week and kind of go over it and see what you did right and what you did wrong. And before you get to trading big size, we really go through the blotter process, because learning things is one thing, actually doing it is another. Making sure that you have the emotional will to follow the rules and to stick to the systems that we teach. Once you can do it right for small size, then you will be fine applying it to big size. You'll have the confidence to do it. But unfortunately, a lot of people just jump into the market. They start firing away with lots of size, and they don't necessarily know what they're doing, or they haven't really tested it enough, and that's what hurts them. And then you're just an emotional mess. And we try to overcome that. So the blotter process, the blotter review process is important. You get through most of the course material, depending on the speed you go at a little bit, obviously, but we try to get you through most of the material within about 4 months. So the back 2 months of the program, you've got all the information and you're just doing those blotters every week, and we're working through and making sure you're not making mistakes, so that then you're ready to go off and just do it on your own. Most of our traders do that, and you'll end up picking what you like most. Are you an options trader, like Rob was saying, or do you intraday stock trade? Do you do futures trading? Do you a little bit of both? I do both. I do all 3. you know, and you just focus more on those pieces. You know, we teach you how to do the option stuff over both short and long term, meaning intraday, but also, you know, we have signals that pop up on 65-minute charts that play out over 2 weeks. We teach you how to do the options on those plays, so you're not risking a bunch of money in the market. You know, so by the end of it, you should be able to pick what suits you. You know, obviously not everybody is a pure day trader and not everybody is a pure swing trader. So we just try to work around what you need and customize it to you, but the tools work the same, like I said, no matter what.
All right, and the last question, which I'm curious about too, that I missed is, are the levels drawn automatically, or do you have to do the math and mark the chart yourself?
If with our subscription, the levels are drawn automatically.
All right, awesome. Chris, I can't tell you how impressed I am. Great information. Your presentation on using pressure thresholds to trade futures was amazing. Ladies
Thank
and
you.
gentlemen, if you're interested in learning how to leverage pressure thresholds into your trading and learn a proven methodology, then Mr. Chris Mercer has a solution for you. We've both placed his link in our special chat box. Chris can always be found at tradesight.com. Thanks again, Chris, so much for being here. We hope you come back, and I want to wish you a good weekend, sir.
Yep, you too. Thank you.
Ladies and gentlemen,
I can actually connect to my dad's Apex, my Ninja Trader. So as long as you can connect to everything and it's listed here, you can use it with the copier. Yeah, so Michael asked, could I see the bottom of the page for the offer again? So what I want you guys to know is, and Rob, need to put the link in, there's a link where you guys need to go look at this page, affordableindicators.com/traders corner. You have to know that link because it's not linked to on the website. This is a page just for live attendees today. And I'm not going to email this out. Nobody. Rob, I think you put it to me privately. Maybe put it in the whole chat. There you go. Awesome. But yeah, Michael, I'll scroll down. And I know this is a big purchase, guys. Like, I'm not saying 3,000 is a small purchase by any means, but I see competitors with $5,000, $10,000 products, and this is it, man. Like, I put everything I have into this chart trader, everything. And I believe it's some of the most valuable tools on the whole NinjaTrader platform. There's hundreds of third-party indicator providers, and not going to say good or bad, but all I have is what I can give you guys here today. So, or what I presented today, I think is the best things I have related to risk management. Abby, I do have a YouTube channel. A lot of those videos are outdated, but there's going to be videos on a lot of these pages, right? So the key levels video, key levels confluence indicator video has a page. And I'll add a link on this page when we hang up, actually, to my latest YouTube videos as well. So I'll put that link on this page. When you go to this page, refresh the page, I'll put it right up there, link to my latest videos on YouTube. You can go look at those. Learning curve. Yeah, I'm less of an educator, Abby, and a promise maker, and more of a tool developer here. But I believe that, again, like, if you would rewatch this webinar and follow the risk management parameters that I put in place, both on a daily basis and then on a trade by trade basis. And like I said, I think you can look at the ATR2 for trade. I know we're over time, Rob, maybe you're giving me some grace here, but you can look at this. So like, if I'm looking at the ATR here, it's 18. If I'm taking a short here, I'd risk 17 points. You could also multiply this by 1.5, which would come out to, say, 28 points or 27, 26 points on a short here. But I think the ATR has value to help you determine your risk. And I think it's just sticking to a plan for risk management daily and on a trade by trade basis that's going to help you a lot. So yeah, that's it. We're a couple minutes over, guys. I just want to say thanks to everybody. This is so fun for me. I could be on the lake or doing something else, but I love being here and getting to just show off some of the stuff that I've been working on. So thank you guys for your attention and attendance. I really appreciate it.
hey, thank you, Joel, and especially this late in the presentation when there's only one person after you, a couple minutes is not a big deal. Ladies and gentlemen, that's Mr. Joel Wyse of Affordable Indicators. Joel, I want to thank you for making such a generous offer to our audience today, and I want to ask anyone in the audience who takes him up on the offer to please write him a review for getting such a discount. It is just amazing how powerful your trade management tools and indicators are. Traders, if you want to harness the power of some of this and the trade management tools available on NinjaTrader, Joel of Affordable Indicators has them available at a tremendous discount. And now is the time to transform your Ninja into a Super Ninja. Joel,
Dude,
it's always
I
a
love
pleasure.
it when you guys have said that, man. I should just put that directly on my website. That's great. And I see
Oh,
Clovis, the
please.
link should be in the chat where you can go to the website and see all the offers clearly laid out. Thank you, Sally, for being here. I recognize you. Yeah, thanks a lot, guys. She says
Hey, please do.
Clovis only sees the boot camp. We'll figure that out,
And
man. You can also reach out to me, Clovis.
we know that I use your trade copier, and it is by far the best one out there. I love your stuff. The few
Thanks,
reviews you have are amazing. Joel, I want to wish you a great weekend, and we hope you come back and see us again.
Thank you so much, man. You too.
Hey, you're very welcome. Talk to you
All right.
soon.
Yep.
Well, ladies and gents, as I mentioned at the top of the show, we had a great lineup, and we are down to the last presentation. I hope everyone is listening closely, because our next presenter is a graduate of Syracuse University, and he's been trading the financial markets for the last 15 years. He wears almost every hat over at Right Line Trading. He is a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and tech support, and is always ready and willing to assist the Right Line Trading community. Here to present AI Auto Trader, powered by Next Gen Intelligence, is Mr. Rory Powers of Right Line Trading. Welcome back to Traders Corner, Rory.
Hey, good afternoon, Rob, and good afternoon, everybody. Thank you for that nice introduction. I really appreciate that. I always get pumped up for Traders Corner. It's a great venue and great audience. So happy and honored to be here today.
Always honored to have you, Rory.
Oh, thank you. I appreciate that. I see a lot of people in the audience, and listen, stick around. I've got some new material. We've had some new releases, a real exciting week, an exciting month of August, and I'm going to get into it. Stick around. I know it's been a long day, and there's been a really talented lineup today, and I had the pleasure of listening to everybody. But stick around because I'm going to make it short and to the point, and I've got something I think that's going to really be of interest to you. What I'm going to be presenting today is our AI Auto Trader, and it is based on mathematical modeling along with some artificial intelligence. And with that being said, let me get the CFTC out of the way. All signals and trading opportunities. This is for educational purposes only. The gist of this is that trading comes with a substantial amount of risk. There's a good chance, well, there is a chance, hopefully not a good chance, but there is a chance that you could lose your entire trading account. Who knows? They might even come looking for you for more. So if you're not familiar with the risk associated with trading, please consult with a licensed trade advisor. I'm certainly not one of them. My presentation is for educational purposes only. And I always like to just show you just a little bit about myself. Rob did a great introduction. This slide here, this is myself, and I'm really blessed to have found, God brought this beautiful woman into my life. She's actually from Haiti. And let me tell you, you guys have not been to a wedding until you've been to a Haitian wedding. We got married, I think it's about 6.5 years ago now. And best decision I ever made in my life. And our beautiful two daughters right next to us. We have a 4-year-old and a 5-month-old. So that's really, outside of right line trading, that's really my pride and joy, is my family. So let's get right into it. I also want to introduce you. I happen to be very honored and privileged to be part of such a talented and educated and good-looking guys, a great team. And I really think that's a real key to our success is we have a powerful team that all complement one another. And I just want to take just a moment. I know it's been a long presentation. I'm not going to take a long time on this, but I think it's important to know because at the end of the presentation, I'm going to ask you to join at a discounted price. And I think a key component to making that decision is knowing who's behind the company. We don't take your hard-earned money lightly. We don't monkey around with your money. We want you to get the most bang for your buck, and we want to provide you with a trading system that's going to provide you with potentially dividends, ongoing dividends to come. So, our vision as software developers is we want to be able to predict the future direction of price. We have developed a very powerful trading system that not only helps predict the future direction of price, but does an incredible job of defining risk. And we have a number of different ways that we can leverage that information. I'm proud to say that we're one of the few vendors that actually trade their system on a live market on the right edge of the chart every morning. It's my inbox is full of Monday morning quarterbacks who told you about the great trades they took and the big moves and the hundreds of thousands of dollars that they made. But it's done in hindsight. It's done in hindsight. And that's the big difference. These guys that run our trading rooms, they're on the right edge of the chart with all of the static and confusion and talking heads. They're on the right edge of the chart, trading our system on a live market every day. And I know most of you, all of you probably know when that opening bell rings, it's not that easy. So we have a great team. I first want to mention our prop trader, Mr. David Kushner. He has 6 funded accounts with one of the prop firms, and he has a trading room. He runs our prop trading program. In a live trading room, he calls out the trades every morning. He also uses a trade copier, and he takes it very seriously. This is his business. David has a special software that journals every trade that he takes, and he goes back and he looks how he can improve, and he looks at the data, and he's making his trading game stronger and stronger. But he's well versed at the prop trading rules and regulations, and let me tell you, they don't make it easy. It's passing that initial hurdle to get funded is one thing, but then it's a whole other ball game to stay funded, right? So David Kushner provides that support for our prop traders. He's got a great live trading room. He trades all of the instruments. He's extremely conservative, disciplined, and he does follow ironclad rules before he takes a trade. We also have Mr. Craig Emery, who is down here on the bottom left. Craig, has been trading, and listen, this is I've heard this story. I've been talking to traders now for 10 or 12 years, probably 6.5 days a week, and he's got a very similar story to all of us. He's blown out a lot of accounts in the past. Just couldn't find anything consistent. Bought a lot of trading systems that just didn't work. He found a home with Right Line Trading about 3 or 4 years ago. He also trades in one of our live trading rooms, and he focuses primarily on the NASDAQ and the E-mini. He's a great guy, Mr. Craig Emery, and shares a vast amount of knowledge and experience during his trading sessions. And one of our options traders, in fact, a very close friend of mine, Mr. David Wyse, really I mean, when it comes to trading options, I like to, um, he reminds me of the Pete Rose of options trading. Pete Rose was the all-time leading base hitter. Sure, he could hit doubles and triples and an occasional home run, but by God, he was on base consistently. He was getting singles and singles and doubles and singles, and he was constantly winning. And that's David Wyse. He has a winning percentage of 90%, leveraging our trading system, and he trades options. Pete Rose was a switch hitter. David Wyse has a couple of different options configurations. He's a very savvy guy. He has his buy super system, his weekly ATM strategy. If you do trade options, go to our website, check him out. He's incredible. I know you'll learn something and make some money. You have the potential to make a lot of money with him. And last but certainly not least of our traders is Mr. Mark Sachs. Mark Sachs is the former owner, and he is the developer of the Right Line trading system. He kind of laid the foundation down for us. And what can I say about Mark? He's an extremely intelligent guy. He's a graduate of the University of Pennsylvania. He was in the Honor Society. He's probably one of the smartest people I've ever met in my life. He's an incredibly good trader. He runs a couple of options alert services, and he continues to contribute with the development of our software. And we also have a couple of newcomers. We have Mr. Brock Miller. Brock Miller is this gentleman right here. And Brock has several years of experience in customer service. He's working towards his formal computer science degree, and he is minoring in digital marketing. And we also have Mr. Jacob Thomas. Jacob Thomas, I like to refer to him as our AI prodigy. I don't know if he used it to take his tests in school, but when it comes to AI, he's really sharp. He has also a solid foundation in customer service. He's actually getting his formal education in cybersecurity and computer science. Very smart guy. And he's assisting the company with marketing, sales, tech support, and development. And I certainly don't want to leave out the leader of the Right Line trading team. Purchased the company from Mr. Mark Sachs, and he is a U.S. Army veteran. He's a Cal State graduate. He graduated with the MBA program, and he spent many years, dozens of years, as a retail day trader and stock market investment. But what he's brought to the team, and I've really got to lift him up for this because I respect him a lot for it, is he brings those core military values of honesty, integrity, transparency, and just good old fashioned hard work. There's no shortcuts. And as a team, I can tell you, we work long hours to provide the best products and services, just like everybody who preceded me. I know Joel Wise and the rest of the preceding presenters do the same. I think his most admirable quality is his spirituality. He's a man of God, and I respect him for that. I did leave out Luque. I call Sergio Luque. Sergio Rodriguez. Me and Sergio have been with Right Line Trading, must be close to 10 years now. And let me tell you something about Sergio. When it comes to solving a problem, I don't care what it is. If it has something to do with the computer, he will figure it out. Okay. If any of us get stuck on anything on the computer, Sergio will dissect it. He's got a master's degree in computer science. He is dealt with complex analysis of price, market structure, correlative markets. He's really brought our software system to life. with very complex instructions and mathematical modeling and equations. He's extremely intelligent. And I also left out my good friend Charles. Charles is the engineer on the team. And Charles has a bachelor's degree in computer science from none other than UCLA. Okay, UCLA. So you can see here that we've got a talented group, a highly educated group of software developers, engineers, traders. We really have a diversity of and mixture of talent on the team, and I'm really proud to be a part of it. If any of you ever have the privilege of having a session with Charles Sider, he has over 30 years of experience. He's a trader. He spent 25 years developing strategies and indicators. He really pays close attention to detail. That's the engineer in him. And he seeks improvements in the tiniest of detail. Listen, it can sometimes drive you nuts, but it's a good thing to have. He's a good guy to have on the team. And you can see I'm part of a talented group. So, not only is it our team, but we consider you, if you do decide to join us today, we consider you part of our trading family. Our goal, and let me tell you, there's not only is there power in numbers, but our goal is to have a community, a family of traders who all collaborate and share their experience, their results, what's working, what's not working. We've gotten some of our best ideas from some of our members. I speak to people every day, and I just recently, a few different people that I've spoken to, they just provide us with great insight and great ideas. So let's keep it moving. I don't want to harp on our team, but I do think that that's very important. Listen, we've all, as traders, we're all in this struggle together. I think of in biblical terms of David versus Goliath. We're David with this slingshot, and the market, this big, powerful monster, is the Goliath that we're trying to, extract some profits from each morning. And I've always loved the underdog, and maybe that's why I kind of have a passion for this. But listen, it's a struggle. It's a journey that's full of speed bumps. And I know for myself, and I like to just, make it personal because I don't want to point the finger because it's something that we all share as traders on our journey. Listen, we've all blown out accounts. We have emotional, me personally, I tell you, it's a little embarrassing to even say, but listen, when I'm in a trade and the thing's going against me, I want to exit early. If I start winning a trade, I want to squeeze my stop. If I lose a trade, I want to revenge trade and win it all back. It's just the nature of our personalities. A few weeks ago, it was right here on Trader's Corner. One of the presenters had mentioned, he said, listen, there's 16 people have 16 different personalities. And I think two out of 16 of these personalities lend well to being a trader, which means 14 out of 16. Okay. And I'm definitely one of the 14. 14 out of 16 just don't have the personality that lends well to being disciplined and following the rules and and being a successful trader, setting aside those human emotions. For myself, and maybe you can relate, I sabotage my own trading in a fast-moving market to make split-second decisions with a lot of money on the line. It's very difficult. I like to think of Michael Jordan playing basketball. This guy was incredible. I mean, he would get in the zone and score 50 points and do, these acrobatic moves that we could only dream about doing. And To me, the 5% or that very small percent of traders that are successful, they remind me of the Pete Rose analogy, like a David Wise or a Michael Jordan on the basketball court. It's you got to be in the zone mentally, and not all of us can get there. So it has been our commitment as a team here at Right Line Trading, including myself, to bring all of this to an end. We want to even out the playing field. We want to win. Okay, that's the bottom line. We want to win, and it's our commitment to help you in this trading journey. If you're trading your own money, we want to grow your account. If you're trading a prop account, we want to get you funded and we want you to stay funded. Okay. And I'm going to show you exactly how we're going to do it. This, I don't have a lot of time, so I think I covered this. As software developers, looking at the right edge of the chart, it's a big question mark. You know, we don't want to let our opinions and biases get in the way. What we rely on is our trading system, the technical analysis, to give us a guidance as to which way the future direction of price is going to be. So the two things that we established that we're going to need for trading success is, number one, we need the proper tools. If you're a carpenter, you're not going to go build a wood deck in somebody's backyard without a hammer and nails. If you're a trader, you need some tools, you need some indicators, a strategy, a game plan to get you into the highest probability entries. You have to have the proper tools, or you're going to get left in the dust. And let me tell you, it's it's not an even playing field, and it's if you don't know, I'm here to tell you. You've got the market makers, we've got slippage, we've got a bid-ask spread, we've got these we have the big institutions that do these have these high frequency trading that are dumping millions of dollars into the market and faking us out. Look what happened on last week when they put out the CPI report. I guess the report wasn't as hot as anticipated, and at first the market went up. And man, I would have thought, hey, let's jump in long. But what did they do? The very next day, they faked us out and it went down. So we have to have an edge when we're trading the markets. And we ideally, we'd like to have software, especially if you're like me and you have trouble trading on your own and being consistent. We need software that can automatically get you in and out at the lowest, defined by our software, at the lowest risk, highest probability entries, and get you into the trade automatically. And that's what these hedge funds and these large institutions are using. Let's not kid ourselves. They don't have somebody clicking a mouse. It's all done automatically. So what I'm about to show you here is we believe by far, and we've been developing strategies and indicators for going on 12 or 13 years now. What we have today is by far the most powerful automated strategy that we've ever developed. And I'm going to go into detail and tell you why exactly it's been working so well. And I started the presentation off mentioning how August has been a great month. And I'm going to be showing you some of our success, some of our equity curves, the performance. Ninja Trader, this is a strategy. Let me tell you a little bit about the product that we're offering today. The AI Auto Trader is a strategy that runs on Ninja Trader 8. Ninja Trader 8 is now a free platform, okay? So if you're not a prop trader, if you're a prop trader, you're going to get the platform and the data for free. You don't have to worry. If you're trading your own money, the good news is Ninja Trader is now free. Okay. What powers this software, this system, is all you would need is the CME level 1 bundle. It's $12 a month. It's a very nominal fee. $12 a month, and that will provide you with all of the data that you'll need to run everything that I'm going to show you here today. Our talented team, if you decide to come aboard today, will share your screen and set this entire system up for you. Okay, so don't worry about the tech part. Now, NinjaTrader happens to be, and I don't work for NinjaTrader, okay, but it is an extremely powerful futures platform. It's extremely powerful. They have backtesting capabilities with their strategy analyzer that is a powerful tool that assists us with optimizing the inputs of our templates very quickly. Instead of spending hundreds and sometimes thousands of hours forward testing, we can run back tests in just a few minutes of a lot of data. And that assists us with optimizing our settings. They also have some great ATM strategies. It's just a great platform for trading futures. And it's no coincidence that that's what Apex, which is a really large, prop firm, is using for their trading funding. So the powerful proprietary indicators that this system leverages, I'm going to go over with you. And we have a very exciting automated trade management that's been coded right into the parameters. Our proprietary momentum-based trailing stop kind of attaches to our 15 EMA. We use an EMA of an EMA. We call it our smooth fast line, and it's a smoothed out 15 EMA. But our proprietary trailing stop follows the trade. It will lock in as much profit on the move and then exit when momentum wanes before it comes back and takes your profits. Okay, so we're going to go over that in just a quick second. What are the benefits of using an auto trader? I think the benefits, this is a system that's going to do the same repeatable thing every single day. Okay. It doesn't have any human emotions. It doesn't wake up in the morning and have a hangover. It's going to follow the rules every single time. And it's going to do exactly as it's programmed to do. All right. What I like most about it is it doesn't cut my winners short. I don't mismanage my trades anymore. I don't overtrade. In fact, I don't touch the mouse. When I touch the mouse, listen, experience has taught me that I'm not a very good trader. I might string together a few winners, and I might even have a good week or a month, but it's only a matter of time before I get in my own way and I blow my trading account. So that's what I love about this. Everything is done for you automatically. Let me pull the questions over here, just in case somebody has a question. And I'm going to keep moving. Yes, Mike, I did mention Charles Sider. Charles Sider is now with Right Line Trading. What financial instruments is this trade? Good question, Ryan. This right now, if you do order today, what the system comes with are optimized strategies. We have a really powerful portfolio that I'm about to go into now. The instruments that it includes, we have our Golden Goose, which runs on the gold instrument. We have our Nighthawk, which runs on the NASDAQ. We have the Volkswagen that runs on the NASDAQ. We have a couple of strategies that runs on the S&P 500. And we're getting very close to releasing a new strategy on bonds. We found something really great on the bonds. And we're really, let me tell you, and I'm glad you brought that up, Ryan. I speak to traders all the time that are very dogmatic about what instrument they want to trade. They want to trade crude oil, or they want to trade the S&P 500. We're really not that picky about which instrument it is. The most important thing to us is that it's a liquid instrument, that there's not a big bid-ask disparity, that we can get in and out of these trades without a problem quickly. And we have something that makes money. If it makes money, it makes sense. And that's the instrument that we want to trade. Okay, so we do want to diversify the portfolio with a number of different instruments and a number of different time frames. But right now, we're just running the ones that are making us money. Okay. Hey, good morning. James said good morning from Australia. Good to see you, James. Okay, so what is in our secret sauce? What powers our software? Let me show you a chart. I'm going to show you a chart on gold and just run through what powers our automated strategy. We had a great week this week on gold. Let me see here. So what runs our system and why we're having so much success is the main thesis behind developing our software. The main idea is we wanted to follow in the direction of institutional money. We don't necessarily want to find tops or bottoms. I heard Joe mention that earlier. But what we're looking for is to get into the meat of these moves down in this example that you see here. So how does our software define those entries, and what triggers a trade? Number one, hey, Irfan, good to see you. Number one, what we're looking at is the market internals. Okay, the market internals to us is like putting our finger on the pulse of the market. Let me explain what the market internals do. It's looking at 16 different indexes, and it's looking for a disparity between uptick versus downtick. It's also looking at a few declining ratios in moving averages. And when there's a large disparity of, in this case, downtick versus uptick, on our chart, you'll see these little triangles. And that's telling us, hey, right now, there's a huge disparity between downtick rather than uptick. So it's not a lagging indicator. It's telling you right now, you've got that disparity. The market's going to go down now. And it's an extremely powerful trigger. It's one of our conditions of our automated strategy. The second condition that we look at, you could see in the back of my chart, are these pretty colors. On a down move, they'll be pink. On an up move, they'll be green. Well, what that is it kind of assures us that we have a multi-time frame alignment of trend, okay, of trend. So we call it our bias indicator. Without the bias indicator, what traders normally do in order to make sure they're not getting into a counter trend trade, and maybe some of you have done this, is you might be trading a 2-minute chart or a 5-minute chart, and then you look at a 30-minute or a 1 hour or maybe even a daily chart, just to see what the higher time frame trend is. And that's what this background bias does. Our automated trading system will automatically assess the two higher time frames when it comes to trend. We found statistically that when we take trades with the market internals and the multi-time frame assessment of trend aligned on two higher time frames, that our win rate goes up exponentially. Okay, exponentially. So those are really the two core indicators that are part of our secret sauce. A few other conditions. I heard Joel mention a couple of moving averages. I think he used the 20 and the 50. This one happens to use the 15 and the 50. And we respect market structure. For a short trade, we always want our 15 below our 50. And on this trade here, you see the 15, which is my dotted line, is below my 50, which is also red, pointing down. We also respect pivots and the VWAP. All of these are taken into consideration before you take a trade. If I right click my chart and I go to my indicators, our signal indicator has what we call a dashboard. And if I enable the dashboard, what will happen is all of the conditions that must be met in order for our system to trigger a trade will be listed at the top left of your chart. I've had a lot over the years. I've talked to a lot of traders. They're like, "Hey, this was a perfect setup. Why didn't it trigger a trade?" Well, the reason it didn't trigger a trade, we can go back and do market replay data, and it'll tell us exactly why it didn't trigger a trade. So that's called our dashboard. When each one of the conditions has been met, it will turn green. And when all of them turn green, you'll get this cross that comes out on your chart. And that's telling you, hey, it's game on. If you have your strategy enabled, we're going to take a trade. All of the conditions have been met, and we're going to enter this trade at this point. So that is a completely dynamic dashboard that we've coded into our strategy. Okay. If the market was open now, you would see all those values moving, and so it is a dynamic component of our automated trading system. Somebody asks, is this the same as the Compass and Dominator? The Compass is our system, Ryan, that runs on Thinkorswim, that David Wyse uses to trade options. This system that I'm talking about today runs on NinjaTrader. I would call it the NinjaTrader Dominator. Yeah, the NinjaTrader Compass or Dominator. Yes, the Compass is our Thinkorswim version. All right. So let's keep it moving because I want to get to the new stuff. And this is what our prop traders we had I think it was about a half a dozen of them get, funded this week. And it was a real exciting week in our Discord chat group. And some of the new features that we've recently introduced, which were actually ideas of some of our members. We've integrated what we call our reverse trade. One of our most exciting strategies called the Nighthawk uses a reverse feature. And I'm going to go, I might as well start now with the Nighthawk. The Nighthawk, is an extremely exciting strategy. The way it works, I like to refer to it, it makes me think of, and I said this last time, I don't know if you guys have ever watched Seinfeld, but, George Costanza in Seinfeld, I saw an episode where, no matter what this guy did, it was completely wrong. It didn't matter what it was. He couldn't, stay out of trouble or doing the wrong thing. So he thought to himself, well, you know what? When I'm getting ready to do something, what I'll do is I'll just do the exact opposite. And he did it, and it seemed to work for him well. Well, this is kind of how the Nighthawk works. It's a reverse strategy, and we had an incredible week, and we really learned a lot this week. I could show you this week's charts and the trades that it took, and give you the performance. You can see the entries on these trades. Let me stretch it out just a little bit. It took a long trade. Let me see where the entry was. The long entry was here. Okay. No, long exit on line change. Long first target. Okay, it took the long entry here. So right when it came down to our area of support or resistance, it bounced off the pivot, and it came right back up and hit our second target. Now, let me tell you, these aren't small targets. These targets, the first target, it hit on the same candle. It entered the trade and bounced right up and hit the first target. And then it went on to hit our second target. Our ATM strategy is 60 and 100 tips. So these are not small trades. This isn't, I wouldn't consider a scalping strategy. 60 ticks and 100 ticks. This here took a long entry right here. It looks like the long, it hit our stop on that trade, took another long entry, and it came all the way down, and it looks like it took a winning trade on the second one. But for the week, and it's important that I point this out, because what we learned running this strategy, and the more we learn and the more data points that we get, the better we can optimize these strategies and make them more and more effective. What we learned, if I look at my strategy and analysis of the performance, what we found on this was in the first 2 hours of the market, actually starting pre-market, we actually start this strategy at 8:30 in the morning. And then what we do is we disable it, or within the parameters, we have a start time and an end time. And within the strategy parameters, we put the end time at 11. So it only trades from 8 to 11. And that's what our data supports. Well, this past week, running this strategy, it was the #1 strategy. Between 8 and 11, it made $3,125. Okay, $3,125 between the hours of 8 and 11. Now, after 11, okay, what it did was it lost $4,000. So this strategy, when you receive this strategy in the settings, it will only trade between 8:30 and 11. And that's what we call our Nighthawk. That's our new Nighthawk strategy that takes those reversal trades. Really exciting strategy to watch. This is a picture of the Nighthawk. It actually set our record, believe it or not. Between 8:30 and 11, this strategy made over $4,000 in a single session. So it's been extremely profitable, and we're really happy that that's part of our portfolio. It's a great diversity of strategies to have that in the mix. This was some of the trades that I just showed you on the actual chart of the Nighthawk. And listen, we have a great community of traders. If you decide to come aboard today, I'm running out of time quickly, and I want to respect your time. So I just want to go over a couple of quick things. In our Discord chat group, listen, it was really a week that we all celebrated. We want you to get funded. We want you to stay funded if you're a prop trader. If you're trading your own money, your own live account, we want to provide you with something that's going to get consistent gains with very little drawdown. That's really part of our trade management strategy, is to keep the losses to a minimum. And one of our new features it happened to be one of our members' ideas. What we did is we developed within the strategy the ability to hit your calculation. What we do is once your strategy loses a certain amount, we want to stop the trading. Okay, we don't want it to drain the account or break the rules or bust out your live trading account. If it loses a predefined amount of money, whatever your risk tolerance is, it's going to stop trading. And not only that, but once you reach your profit target, which I think is really even maybe more important, my goodness, if you have $1,000 in the bank and you've made $1,000, stop trading. Call it a day and live to fight another day. And don't give it back. Don't give it back. So capital preservation is really key. And within our strategy parameters, we could set whether we want one individual account to have, which can run several strategies, or if we just want to run in one individual strategy, this drop down here, it goes from per account to per strategy. So if we're running a portfolio of strategies, let's say on your live account or your prop account, and we have one strategy that's just having a bad day, it happens, and that's why we diversify these. What'll happen is it'll hit its loss target and stop trading. It'll stop pulling you down, and the ones that are doing well will continue to trade and pull you back up. So it's a very intelligent system. There's certain days of the week that we found that, just don't lend to trading certain strategies. We have this optimized down to the hour of the day and the day of the week. So we're only going to trade when we know statistically we have the best chance of winning. And that's what makes this really an extremely intelligent system. One of our favorite strategies, we call it the Volkswagen. The NASDAQ, kind of runs like a Lamborghini. If you've traded the NASDAQ, then the NASDAQ runs like a Lamborghini. This strategy, we've kind of slowed the settings down to kind of like a Volkswagen. And let me tell you, it's probably one of our top strategies. The Golden Goose, we call it the Golden Goose. It runs on gold. It says the NQ 1 minute. No, I'm sorry. This is the Volkswagen. The Volkswagen does run on the NASDAQ 1 minute. The Volkswagen is one of our top strategies. And that one runs on, the Volkswagen runs on the NASDAQ on the 1 minute. These are some of the trades that the Volkswagen has taken just this week. Or last week, either this week or last week. You could see that the system is only going to take trades that are tight to the 50. We call that our MA diff. The 15 must be tight to the 50. Once that 50 starts getting away, price has a tendency to revert back to the mean, and we don't want to get into an oversold environment. That's kind of our reverse strategies that we use. We wanted to get into an oversold environment, but the ones that we want to get into the meat of the trend, we wanted to take trades right in the meat of the move. Once it gets overextended, price has a tendency, like I had mentioned earlier, to revert back to the mean. And look how this strategy just sidesteps all of this chop. All of this chop, it doesn't have the deep green background. All of the parameters have not been met. Okay. Listen, it's one thing to pull in a lot of winners. That's pretty. I think everybody can get a winning trade. It's a whole other ball game to try to eliminate the losers. Okay, and that is the key to this software. Is we want to sidestep the losers. We might, at the expense of letting some of the winners pass us by, we want to sidestep the losers. And you could see how this Volkswagen strategy sidesteps these losers and gets right back in towards the end, towards the middle of the day, and just runs up the score for over $1,000 that day. Once we reach $1,000, the strategy has preset parameters. We shut the strategy off and call it a day. Now, you might want to shut it off at $400 or $500. Whatever your profit target is, you could set it in the parameters, and once it reaches it, it'll stop. Okay? So that's really one of our best strategies. We call it the Volkswagen. Here's another example of the Volkswagen. I mean, you could see how tight to the 50 that it takes its trades. We don't want to get into these overextended moves. Sure, we could have maybe won this trade here, but we found that looking at the data, that when we take trades with this distance from the 50, we're overextended. Price always wants to revert back to the mean. So we'll let that one go. Statistically, we're going to lose those trades in the long run. We'd rather take our trades tight to the 50 with all of our other parameters in line. And I think that's why we're having so much success with this trading system. So you can see on this day, this is our Volkswagen strategy. Just take a number of winners on that big move down at the open, sidestep all of the chop, jump back in here. It looks like it might have taken a loser here. And then at the end of the day, it just crushed it and wound up winning $1,400 that day. And listen, we have a number of strategies. Right now, our top three, we have our Golden Goose, we have our Nighthawk, and we also have our other top strategy. We have the Golden Goose, the Nighthawk, and the Volkswagen. The Golden Goose, one of our members, and listen, we get some of our best ideas from some of our members. We have a member is AKA Goose, and he worked together with our team, and we developed a strategy that's doing incredibly well. So the Golden Goose is also one of our strategies. So I don't want to take up a lot more time. I had so much more material that I wanted to go over with you. What I do want to do is I want to mention some of the new releases that are going to be coming out very shortly. I had a lot more, stuff to show you guys, but one other thing, we're coming out next week, hopefully, with a new strategy. It's called the we like to call it the it runs on the E-mini, the Freebird, and the Freebird. I mean, this thing is we're just getting ready to release it. It's going to have a very unique ATM strategy. It's going to run on the ES, the S&P 500. Man, this thing in one day it made over $2,000. I ran it 24 hours, but we do have some improvements to make. It's unique in the sense that it runs on a 10 range, where our other charts are running on minute bars. This is a strategy that runs on a 10 range on the ES. We call it our Freebird. And so we got the Golden Goose that runs on gold, and we're going to have our Freebird. We're making some optimizations to our code because this is going to have a very unique strategy that's going to be tied to our 15 EMA. We have an exit, and I don't want to go over time because I know it's been a long day. But if you notice on my chart, the 15 EMA is this green line. And when this system triggers a trade, like it triggered here, what it's going to do, it's going to stay in the trade until that line changes yellow. It's not going to have a stop. It's just going to exit on the line change. I just wanted to test the entries over this past week. And let me tell you something. This thing is going to be, I think, by far our best strategy. The Freebird, we're calling it the Freebird because it's going to have the exit based on the line change of our 15 EMA. And you can see if I had this in place, if we had that stop ready, it would have stayed in this trade all the way here until the 15 EMA changed to yellow. So it's, the way we had to do it with a trailing stop, it's going to be even better. That's what I'm trying to say. So that's going to be coming out. If you decide to come aboard today, next week we're going to be releasing, we call it the Freebird, and you will get that. It runs on the S&P 500, the ES. This is a chart. I mean, we didn't have the 15 EMA stop working properly, so I had to use the stop a little different. But the entries that this thing took, I mean, it ran up the score. It was like almost $2,000. Then it hit midnight and started the next session. It was already up 412. So this is the Freebird that's going to be coming out. So if you come aboard today, you're going to get it. It's going to be part of the package next week. I want to congratulate the members in our Discord chat. Listen, if you decide to come on board today, you're going to be part of a community of traders that we consider you part of our trading family. And we all, we all meet every morning in Discord. We all collaborate with one another. We discuss what's working, what's not working, and we share our successes and our failures. We had the good fortune this month. We had several, at least a half a dozen traders that got funded, that consistently make profits on their funded accounts using our system. These are some of the comments that were posted in our Discord. We have a chat group where we all share our strategies. We ran, several Apex accounts using our strategies. One of them on the Nighthawk and the Volkswagen combined, we're up about $1,800 before we shut it down. We had several members pass their evaluations. My trade fortune passed his. A member of our own team, Brock. And let me just mention this because I think it's important. Brock, who I don't think he's ever traded in his life. Here's a college student in his early 20s who really, up until probably a few months ago, never traded. Used our system, which is fully automated, and got a funded account on his first try. Okay, on his very first try, he got a funded account trading our system. Okay, so listen, there's hope, and I bring a message of hope. I've blown out so many accounts. It makes me cry to remember. But there is hope. If you suffer from these emotional problems, we have a strategy that I think is going to be a game changer. And it has been for a number of our members, which is really extremely satisfying. So I want to give you our special offer. I don't want to take up too much more time. Thank you, for Traders Corner, for letting me go a little bit over. I wish I had more time because I had more material, but the special offer that we're going to run, and listen, our number one goal, if you're running a funded account or you have a prop account, we want you to get funded and we want you to stay funded. Irfan, we want you to stay funded, okay? It's one thing to pass the evaluations. I mean, Brock did it on his first try. Well, we need consistency. We need longevity, and that's what we're here for. We want you to become a part of our trading family, and we're going to offer you a special discounted price. Rob or Jacob, if you could put the link in the chat box. In the chat box, we're going to put a special link. It's our Traders Corner special offer. And what it includes is our discretionary and automated systems. We're going to give you all the chart indicators. We're going to give you all the strategies, which is going to change. Soon we're not going to include all the additional markets, but for now we are. Okay, so don't worry about that now. So you're going to get every single market moving forward. I'm part of a talented group of traders and coders that are continuing to. I'm running, myself, 25 different variations of different strategies. We've got members of the community helping us, and we also have a great team that's continuing to come up with great stuff. So you'll get all the additional markets. We're going to do all the heavy lifting for you. If you're not a tech guy, don't worry. We're going to jump on your computer. We're going to install the system. We're going to get you up and running. We're going to let it run for a week. We're not going to start your subscription for a week. Okay, I want you to come aboard today because the offer does expire tomorrow. Normally, it's a little bit more expensive. So we want to get it up and running. We're not going to start your time for at least a week. We want to make sure that the system is set up properly. that you're getting the results that you're supposed to be getting, and we want you to know exactly how to navigate the system. We do all the heavy lifting for you. So it's $2.99 a month. Use coupon code SAVE $100. Or if you want to do the annual, it's by far the best value. For $19.97 a year, you just have to use coupon code SAVE $500. If you use that coupon code, the price will come down to $19.97 a year. It's by far the best value. You'll be with us the whole year, and let me tell you, it's going to be a fun ride. I hope that you'll join us. So I believe that either Rob or my associate Jacob has put the link in the room, which I see they have, and make sure you use those coupon codes. Let me see if I can answer just a couple of quick questions. Boris asks, can your software take profit and trail? We do have a built-in trailing stop, Boris. Our strategies all do have a feature that they'll stop trading once they reach a certain level. Listen, that's the biggest thing, Boris, is trade management in my eyes. We're gonna potentially, we have the potential to put profits in your account every day. It's important not to be greedy. If you've reached your profit target, stop trading. Stop trading. It's very hard. We had a member in our room in our Discord chat who I happen to love the guy. I've known him for a number of years, but his auto trader went up 1,500, but he didn't turn it off. He kept going. He figured he'll make 5,000. And he winds up giving half of it back. But listen, be prudent here. If you're up 1,000, and that's what I do with mine. If I'm up 750, I set it at 750. It usually you'll go over 1,000, and it'll stop trading, and I'll disable it, and I'll put it on sim and just get data. So if you run up the score and you hit your profit target, call it a day, man. Call it a day. Are all the computations done on your servers? No, Steve. This actually runs right on your own computer. This is a strategy that's built under the NinjaTrader strategies on your control center. If you click strategies, they're built right under there. It's housed on your computer. It's not a black box system. You certainly could run it on Speedy servers or another VPS, but this one runs on your own computer. You can trade micros? Yes, absolutely. Chris, we moved away from Renko bars. Renko bars are very difficult to back test. They do smooth out the chart, and for discretionary trading, I think they do have some advantages. However, for optimizing automated strategies, they become very difficult. What minimum prop account works? That's a good question, actually. You want to give yourself some room. Listen, they call it a $50,000 account, but in essence, I think if you take a $2,500 drawdown, you blow it out. So let's call it let's call it what it is. It's a $2,500 account. And if you have the one below that, it's a $1,500 account. So listen, we have every single one on our team has accounts with the prop firms. We're well aware of the rules, and we have profit loss limits and daily loss limits that come with every strategy. So we take those into consideration. We want you to get a funded account. That's our number one goal. Well, actually, our number one goal is to keep the funded account. Keep the funded account. So, Hermano, to answer your question, I would do at least a $50,000 account. The $1,500 one is just a little too tight, man. Let's give ourselves a little bit of room. Do the minimum 50,000. Give us a $2,500 cushion, and I'm very confident that this system has the potential to get you there. Look, the perfect example is Brock. Brock is, I mean, this guy, he doesn't really know how to trade, and he got a funded account on his first try. Do you switch off trading manually? Absolutely. Listen, we have traders that are great traders. RK. Absolutely. This system provides you with signals that are amazing, outstanding. There is a discretionary component to this, which really wasn't part of my presentation. Now, I highlighted the automation. However, the system does come with pre-formatted templates with all of our indicators. I didn't want to make the chart too busy, but the chart for discretionary trading does come with a number of additional indicators, as well as the chart templates. $100,000. Hamal? Yeah, $100,000 account would be fine. Even a 50,000. Okay, makes sense. Okay, great. All right, listen, I'm really I've run out of time. And Traders Corner, I thank you so much for letting me run over. Listen, I again, I hope everybody has a blessed weekend. And there's so many, you know, great things that are happening with this AI auto trader. I didn't really have enough time to go into it completely, and I wish I would have had more time. Um, but I assure you, for $2.99 a month, this is going to be the most powerful trading system you've ever traded. Okay, if not, you lost $2.99. But we want to make you a permanent member of our trading family. So God bless you. God bless everybody. Thank you so much for joining me today. And thank you, Traders Corner, for letting me go over. Have a great weekend, everybody. Okay. I might have outspoke Rob. Okay, thank you. So I'm going to go ahead and close out. And listen, it's always an honor to be able to talk to traders. I feel the most comfortable and at home talking about trading because it's really what I do every day. Other than my family, this is what I eat, drink, sleep, and breathe is trading. So it's always a lot of fun to talk about it and the new products that we're developing. So thank you for sticking around. Thank you, Traders Corner. I'm going to end the event, and God bless everybody. Have a great weekend.